Hello, everybody. Hello, hello, hello. How's everybody doing?
Hi, everyone. Can you hear me, Boris?
I hear you well. Yes. How are you, Kay?
Okay. Just give me 1 second.
Yeah, take your
Are you going
time.
to share your screen? You want me to share my
Um,
screen?
you can share. I'm sharing my screen right now on my charts, but feel free to share your screen. I'm going to let you basically have the screen to start with because we're not going to trade it until after the event, so you can run people through from the beginning. I'm just going to say hi to everybody in the room. Make sure everybody has all the links. Make sure that everybody on Twitter has the links for the YouTube stream, and just take care of all the other business. So you can grab the screen if you want.
I'm just give me a second. Let me grab the screen.
Okay.
Okay, you should see seeing my screen now. Let me see if I can
Okay.
get the screen on this side. That's much better. Let me move to the daily chart.
Yep. See your screen. Nice.
Okay, give me 1 second. Yes, we are in the daily chart. Good morning, everyone. Um, so, so today we have the inflation report. The inflation report is obviously the most important event risk on this week's calendar. Boris, you've got your live news stream up so that you can scream them out to us when we have them.
Yep. I'm going to do that. Absolutely.
As usual, we will see it in price action first before we actually see it. Before Boris screams it out, we'll actually see the price action of the move. Now, whenever we trade news, like we did on non-farm payrolls, we always take stock of what is expected and also how the market is pricing in. So, this is something that is very important. Let me just see. So are you streaming on X? You're not streaming on my X, it seems.
No. I'm going to have to. I'm going to try. I'm going to try and.
Actually, it is streaming on my X. So for those of you that are on X, Boris managed to get the video stream on X, which is fantastic.
Oh yeah! Awesome.
Um,
Yeah, I did that. I see. So.
So we're modernizing. It's not just the podcast audio stream. He somehow has managed to get us on video stream. Good job this morning, Boris. All right, so we're on the right start.
Okay.
All right, so as I said, when it comes to trading data, it's always important to know what is expected, how the market is pricing in, and to plan appropriately. Now, we don't have much time until the US inflation report. So, just to give you a rundown, I'm going to trade currencies probably immediately after if there are opportunities. And then Boris will take over and he'll be looking for opportunities in gold as well as in indices. So, first off, the most important thing to ask is what is expected, right? So let's boot this up on Forex Factory. So we know.
I'm actually going to. While Kay is going to do that, I'm actually posting what's expected into the chat, so you guys can also have it in chat as well.
Fantastic. So you can see core CPI is expected to grow at the same pace, 0.2%. Headline CPI is also expected to grow at the same pace, 0.2%. But CPI year over year is expected to slow to 2.5% from 2.9%. So headline number is expected to be unchanged, like basically the same as the previous month. Core CPI, which is supposed to exclude the more volatile food and energy and gas prices and auto prices and all that stuff like that, is also expected to grow at the same pace. But year over year growth is expected to slow. Now, I can tell you there's a very, very good chance that the monthly numbers are not going to come out at 0.2%. They're going to either come out on the upside or the downside. And that's where our opportunity is going to be. Now, on Monday, if you joined our Monday Market Buzz, and I encourage you to join our Monday Market Buzz every single Monday, because we talk about a trading plan. We talked about how I am bearish dollars front of the week. Dollar obviously sold off already front of the week. And one of the other things I pointed out is that when we look at inflation, we always like to look at gas prices. And, usually I use gasbuddy.com, and you just click on their link, completely free information. Even though gas is only a part of the headline number, and not a part of the core number. It is part of the headline number, not a part of the core number. It's still important because it's still what Americans are paying out of their pocketbooks. And so the black line down here, this is the chart that Gas Buddy releases every month. And ignore the black line, ignore the blue line, focus on the green line. The black line is 2 years ago, no one cares. Blue line is 1 year ago, no one cares. We only care about current. And you can see, well, this is the August inflation report that we're trading. In July, the average price of a gallon was $3.50. In August, it dropped to $3.40. So from a gas perspective, that should show us that there's a good chance that the year-over-year inflation rate is going to slow, and the core rate is going to slow as well.
Just to chime in, Kate, if you're using gas, which is, I think, a very good proxy for a lot of just headline inflation, in New Jersey, which has the lowest gas in all the nation, it was $2.99. We broke the $3 mark. I saw it $2.99 in Jersey just this weekend. So if you're using that as a metric, and also there's another metric that came out, which is really interesting, that the grocery prices fell at, I think, 3.7% rate, the biggest fall ever recorded over the last month. Those two factors generally make you think that we probably could be softer rather than hotter as far as the CPI data goes.
Right. And I think CPI is going to be softer. The market kind of thinks CPI is going to be softer because you can see that, first off, the US dollar is down across the board, pretty much across the board this morning. The only currency it's not down against is the New Zealand dollar. It's down against the euro. Euro's up today. It is down against the sterling. It is down against the Japanese yen. It's down against the Swiss franc. It's down against the Australian dollar. US dollar is down across the board. A large part of that has to do with US yields. On Monday, we also look at the relationship between US yields and dollar yen. And US yields has pretty much has not risen, in 7 trading days. So US yields have not seen a positive day in 7 trading days. And this coincides with the ongoing weakness in dollar yen. So we know that the market is bearish US dollars going into the inflation report. US yields are down. Gold is flat. Maybe CPI will break out gold. We'll see. The US dollar is down across the board. Good morning, everyone. And stock futures are down. So this is kind of the environment that we are walking into this inflation report with. When it comes to trading news, it's always important to assess what is the sentiment in the market. The market is already bearish dollars. So they're kind of already prepared for a softer release. And that's where we have to be really careful. Now, if you look beneath the hood, you'll see, even though the dollar is down across the board, it's really not down since, since the early European session. The dollar is actually up. So while it looks like the dollar is down, the dollar is actually up. I think I see this best in my zip chart here, where if we look at the hourly chart, we can see nice and clean that dollar yen is actually off its lows. Dollar Swiss is off its lows as well. So while the market appears to be already positioned for a weaker US inflation report, and they are the dollar is lower across the board, it has actually rebounded since the European Open. A lot of the sell-off what happened during the Asia session. Now, that's the kind of context that we have to walk into this inflation report, because it helps to form our ideas on how we are going to trade. For those of you that are joining late, I'm going to be trading FX shortly thereafter, and then Boris will come in and he'll be trading indices and gold. So when it comes to trading news, we have to have a plan, and we're going to have to, try to trade that plan. And it's all about pairing strong with weak. So we know that if we get a strong inflation report, and a strong inflation report means greater than 0.2%, and maybe like the year-over-year rate being 2.6%, for example. So these could be in line, or they can beat. That would be even better, but I don't think they will. And CPI year-over-year is like 2.6%. If that's the case, then I think the currency to really buy the dollar against is a Kiwi. Why? Because the New Zealand dollar is actually the weakest currency this morning. Kiwi is the only currency that is not up against the dollar. And so you can see on my zip chart that we actually have multiple zip sell signals. Now, this is a consolidated range, so take it for what it's worth, and it's also ahead of an important inflation report. But when we have the white candles, the background basically denotes the longer term trend, and where it is in relation to the indicator line reflects the shorter term trend. So you can see Kiwi dollar, when it's below the indicator line, the long-term trend and the shorter-term trend is bearish. And we have multiple zip sell signals. This one attempting to form. We have this one, zip sell, and we have also these other zip sell signals. Now, as I said, this can change if the inflation report is suddenly very weak, which I think there's a greater chance to be. But if it's suddenly very weak, we are in a situation where, all of this will zip by. But if we have a weaker inflation report, a stronger inflation report, a dollar positive number, the trade will be, and I'm going to write this here just so that we're clear. If it's a positive US CPI, the trade will be to sell Kiwi dollar. And also, I don't think we're going to miss out on the fact that dollar yen will also be moving. And so those are the two opportunities. Sell Kiwi dollar, sell dollar yen. Now, sorry, I'm going bonkers here. Buy dollar yen and buy dollar Swiss. Because dollar Swiss this morning was actually trying to zip by. If we look at dollar Swiss is the background's green. And this morning, you see this wick, it was attempting to form a zip buy signal. So if we get if we get a strong number, dollar Swiss is going to form a zip buy signal, which could be a good buying opportunity. And then dollar yen is not so great, but dollar yen is going to react regardless. And then euro dollar is also an opportunity. So I think that actually what I would prefer, we're going to take dollar yen off of this. We're going to minus euro dollar ahead of ECB. Okay, so if we get a stronger number, this is the way we're going to be trading. If we get a weaker number, the way we're going to be trading is we're going to be selling dollar yen because overnight we had some hawkish comments from a BOJ official. And then, we are also looking at the possibility of selling dollar CAD because dollar CAD was in the zip sell zone. We'll have to see. Actually, if we get a stronger number, dollar CAD could also zip by. Let me just check dollar CAD real quick. And I don't really like it too much to the upside. But anyway, I think that if we get a weaker number, we're going to be looking at selling dollar yen. I'm going to take dollar CAD off of this. No, we're going to leave dollar CAD on because oil prices are up 2% this morning. So we have our game plan. We're looking at dollar yen, euro dollar, Kiwi dollar, as well as dollar Swiss. So we're about how many seconds away?
We're at 55 seconds away. 50 seconds away. I'll call out the numbers. Remember, so just to review, market is looking for 2.5 on year on year, 0.2 on core, 3.2 on core.
Okay, let me just say, I typically like 20 pip stop, 20 pip target with my reactive trades. So that's what I'm going to be looking at for these trading opportunities.
Now, if it's in line, it means that we may not have much price action. So if the market kind of anticipated this properly, we'll see if there's any kind of juice here. But if there's a deviation, there should be some volatility. About 15 seconds left. I'll be calling it out. 0.2 is what we're looking for on the core. 0.3 will be obviously worse. 0.1, 0.0 will be really, really favorable. We'll see what the Fed wants to do. Okay, here we go. 0.0.
So very weak, strong number looks like. Sell euro dollar. Looks like
0.3 core. Hot inflation. 0.3 core. Hot inflation.
So Kiwi dollar looks like a good sell at 61.30. Whoa, let's see, 136. Let's just say 61.36. And then
this crushes equities and
euro dollar. I think is going to go to the figure. I like selling it at 18 as well. I think that's going to head down to the figure. It likes to tag the round number, but we're short Kiwi dollar at 61.35. Let's see if we get some pippage out of this. So let's see. Let's revisit the numbers. Why don't you read out the numbers for us while we're waiting for the price action?
So year on year CPI 2.5.
So that wasn't too bad.
No,
And then,
normal,
and then
headline
core
number.
was actually hotter. Monthly number was
Yeah, monthly. Okay, let me just go through the numbers. The monthly number was 0.2 against 0.2 on a headline. Core was even at 3.2 against 3.2, but monthly core was 0.3 against 0.2. Now, given the fact the market was leaning soft, and the fact that it came in a little bit hotter is not good. And also, this really, I think, cements the idea that next week Fed is going to go 25 basis points down.
yeah. So we also went short in the beginning Eurodollar at 110.28, which is not too far from current levels. So we've got two positions on, and let's see if they will work out for us.
Yeah, and if maybe if I can share my chart for a sec, Kay, just for a second, I want to share my screen for just one sec. Let me see if I can do this ad here. I want to show this to you guys. This is very good chart of the CPI on a month-to-month basis, and what you see here, and this is the thing that's going to really bother bulls, in my opinion. So obviously, hot CPI, right? 23. It starts to climb, then it peaks out around February, starts to decline, and we go negative, right? And now everybody's really calm, and everybody thinks inflation has been beaten. But for the last 2 months, inflation basically staying marginally higher, right? Including core going up, and that is really, I think, the deep worry of the bulls. Is if inflation stays kind of sticky, it handicaps the Fed from cutting rates really significantly, or it makes the Fed do a policy mistake where they cut rates, inflation starts to spike, people start to freak out, and you start to see much worse the risk performance. So it's a really good, interesting here chart for everybody to get a much more of a eagle's eye view of how the inflation has driven, and it basically shows you that while inflation has calmed down, it is now stabilizing at pretty higher levels and may even begin to percolate up. So we'll have to see how that goes out.
Yeah, I think overall, like Boris said, the number, if you look at the let's see if they updated it. They got rid of their little the little clock, but it doesn't seem like they put it up yet. All right, so core CPI. So overall, the number guarantees that it's going to be 25, not 50 basis points at the next FOMC meeting. Now, we're not really seeing a significant amount of movement in FX.
Yeah,
we're getting a little bit, maybe we got the dollar is only kind of bid against the yen, which is moving upwards, but I don't like buying that because we're still in the sell zone. But it does seem like that's moving upwards. Dollar Swiss is trying to zip by at 84.85. The positions we have are pretty much the same positions, but the little bit less vol. Because dollar yen can be very volatile. But some of you may be wondering, why are we not seeing more movements? And I think that the only real reason for that is because first off, we saw a reversal in U.S. yields. If you look at my right-hand corner, you'll see that U.S. yields are up 0.6%. Remember, they were down earlier before we were, and you can see that on the daily chart in 10-year U.S. yields. We were down before, and now we're kind of capitulating a little bit. And the market had already been kind of buying dollars ahead of the inflation report because it sold it during the Asia session and then reversed its flow and it's buying dollars. I think it's maybe just taking its time. I think that the market may still be a little nervous about 25 basis points followed by dovish comments. But the inflation report is important. And I think for anyone that was on the sidelines that thinks that, maybe they only thought that they were going to do, that they're actually going to do 50 is now going to shift gears to the camp that they're going to do 25. I still think the dollar is going to rally, dollar yen 142.15. I think, if we look on the shorter term charts, we'll probably end up, holding. But I think we just hang tight and we just see how the market moves. I think, we're not going to get more aggressive because the market isn't. What I like to do is if the trade really goes my way, then we'll start to press more and take more setups. But right now, we're pretty much at the entry price for both of our positions. So we'll see and we'll see what happens. What are you seeing in the other markets?
Equities are near session lows, but stabilized. Sort of a very same situation. In other words, they adjusted in the first minute of the trade, kind of just stabilizing, although there's a little bit of a drift downward. My view is that we'll probably be biased lower today, but we'll see. Equities are always a surprise. I put out a poll right now, guys. Take a second to vote, because I'm just curious. I gave you three choices: 25, 50, or no cut. What do you guys think Fed is going to do? Remember, the conventional wisdom is 25, but it doesn't mean that they're always going to follow that. They may just simply decide, hey, economy is doing really well. We don't really need to do anything right now. Maybe we don't cut. Maybe we just wait. I think that'll be that could be a definite possibility. So we'll see how things go. I'm just curious your opinion. Right now, everybody seems to be voting on about 82% are choosing 25 basis point cut, which is the conventional wisdom. That's definitely it. But there's definitely some outliers here. It's interesting that the outliers are basically either 50 or no cut, getting about 8 to 11% of the vote. Although no cut is kind of picking up a little bit more steam. Really, really interesting. Majudi says they have to cut. Why do they have to cut? What's so critical that they have to cut? Economy is expanding.
Well, if they don't cut, it's going to cause the markets to crash. So I think they have to cut as well. And markets already looking vulnerable. It's going to fulfill my prophecy of September being one of the ugliest months in the stock market if they don't cut interest rates. And I think they know that. And I think, we could ask a more interesting question, Boris, than the obvious, in my opinion.
What's that?
We can ask a more interesting question than the obvious 25. 50,
yeah, no, I'm curious to be, it's not so obvious.
What I want to know is more, what are you guys, are you guys trading? Are you trading your prop accounts right now? Are you trading your broker accounts? Dollar yen's moving upwards. Look, euro dollar finally plus 12. I mean, this is 15. I just take it off here. Take our plus 12 in euro dollar. Kiwi dollar is also plus 10. I still think euro dollar, we have broken below this low here. I think it's going to tag the figure number. So I think we're going to get some opportunity there as well. So we're finally getting some movement. So what does this mean? This means that we require being patient. If we were patient, the actual trades finally moved in our favor. And what did patience mean? Patience meant 8 minutes. So it wasn't, a significant amount of patience. So, I also closed dollar yen at I closed dollar yen at 142.26. So I took basically 11 pips, 10 pips in dollar yen. I took about 12 pips in Kiwi dollar in our live stream. And then also for euro dollar, I actually could just close euro dollar for break even.
Okay. I'm gonna ask, now that Kathy's kind of wrapping up her trades, let's ask, I'm curious, did you guys did you follow Kathy's trades? This is a question I want to know.
I like that question. Okay, so let's look at euro dollar while Boris is doing that in a little bit more finite detail, because tomorrow we have the ECB rate decision. So we took out this low here. All right. So we took out the previous low. What was that low over there? The previous low was 110.16. So below 110.16. Euro dollar is one of those currency pairs that loves to gravitate towards the round number. So I think we're going to make it there. I think we're going to make it to 1.1000. And I think that could be a really good trading opportunity for those of you targeting that round number. And I think it could very much go to that level. And I think that I'm going to put I think, targeting the round number and euro dollar looks good. I still think, dollar yen is going to head higher. Dollar yen obviously has resistance up at this zone here. So euro dollar looks like the one with the least amount of support. I didn't trade too much because I didn't like the fact that the market didn't have an immediate reaction. But, we had a plan. I wrote out the plan, strong number. We're basically selling euro dollars. We're buying dollar yen, and we're selling Kiwi dollars. We had a plan. We set our plan. We executed on our plan. That's how we trade news. We talked through what was expected. We were patient because, sometimes on Friday, if you traded non-farm payrolls with me, we traded a lot more. and we traded a lot more because it went our way very quickly. We added to our positions, we exited, we jumped into another position. Today, the movement is very slow and the movement is very gradual. I don't love that. I don't love it when the movement is slow and gradual off of a strong report. But we stuck to our resolve, stuck to the fact that the number was stronger. It increased the odds of 25 versus 50 basis points. And there was no reason yet to believe that we were wrong. So
Kathy, you'd be happy to know that the majority followed your trades and they made money, obviously. So there you go, 58%.
Fantastic. And, people tell you don't trade news. And you can see this is Zip. I'm watching the Zip signals. The sells are happening. The buys in Eurodollar, the Kiwi dollar is exactly what we were looking for. And I think there should be continuation. Tomorrow we have ECB, so you have to be a little bit more careful about Eurodollar. But yeah, I think it's looking good.
If you guys would like to get Kathy's Zip, I just put in a discount link to our membership right then in the chat. So feel free to use that link. They'll give you a nice big discount. You can get Zip the moment you sign up and be able to use the same tool she's using for all the FX trades. Kathy, by the way, of course, trades live every single day except for when there is news ahead.
Yes.
She trades during the Asia session from 8 p.m. New York time until about 10 p.m. New York time. And then again, during the early New York session from 6 a.m. New York time till about 9 a.m. New York time.
Look, Eurodollar, the round numbers matter. I still think it's headed to 1.10. So for those of you that sold at 11, at 13, 14, I think it's, you may still be able to grab some pips on the downside. Boris is absolutely right. I talk about this so often. It is absolutely important to know when you should trade and when you should not trade. BK traders did not trade last night's Asia session or this morning ahead of CPI. We never trade ahead of CPI. We only trade after CPI. And the same goes true for non-farm payrolls. We never trade before non-farm payrolls. We always trade after non-farm payrolls. If you think about it, why? I know that my strategy trades momentum continuation. And that's what is the idea behind Zip. And if you have a big number being released, there's going to be no momentum or continuation before the number, right? It's just going to be consolidation. That's exactly what you saw in this Kiwi dollar chart. I mean, this is like the example of what consolidation means over here. This is the example of the consolidation. This was our trading plan over here that executed perfectly. So this is the example. And it took the data to drive it down. And this is why we avoid bad trades, which is just as important as grabbing the winning ones. We avoid bad trades by making sure that we only trade at the best times of the day. And for me, it's the Asia Open, the New York Open, where there isn't this huge amount of event risk ahead of us. Rosen, the polls are on YouTube. So if you're on the YouTube stream, you should see the polls there. For those of you that are in X, you can also participate in the polls there as well. And I also don't trade. There's only a couple things I don't trade. I only don't trade ahead of U.S. non-farm payrolls, U.S. inflation, ECB rate decision, as well as FOMC, and then the first release, only the first release of U.S. of quarterly GDP. So, I mean, the revisions don't matter. We trade ahead of the revisions all of the time. So that's, basically knowing how to increase your win rate by being only trading at the times that it works. Questions. We see a lot of questions. You want to read some questions out, Boris?
Yeah, there's a question from Dev, which I think is interesting. He basically says, all economic data predicted the dollar bearish. What triggered your direction towards dollar bullish prior to the data coming out? It really wasn't prior to the data. If you notice, Kathy was telling you, if one, we do this, if the other, we do that. It was only after the data came out that she was able to get dollar bullish.
Right. And sometimes the reason why it's so important to only, I may have opinion, and my opinion matters if I'm trading proactively, which we did in the beginning of the week. The beginning of the week, if you came on Monday, Monday Market Outlook, and make sure you come next Monday ahead of FOMC, I talked about how we'll be selling US dollars before the inflation report, which we did. We sold the yen crosses ahead of the U.S. inflation report at BK. I posted one of the trades on my X feed. So, but then you have to realize that, there's a point to stop. There's a point where, the event risk is so significant and the news flow is so significant that you shouldn't be trading ahead of it. And that stopping point is, right before the data. And then, because the data is so important, like the inflation report, is so important that it can be transformational in terms of the outlook for the currency market. You wait for the market. You don't trade. You don't take any proactive trades 15 minutes before the number, hoping that's going to go your way. As much as I may feel one way or the other, you create a plan, and I walked you through. Many of you came a little late, but we had a plan. We created the plan together. We talked through the plan about how Kiwi was the weakest currency, and how ECB was expected to cut interest rates tomorrow. And so Euro, Kiwi were good trades to sell against the dollar if we had a good CPI report. This little block you see here is my trading plan. And so we waited for the number to come out, as Boris said, I only traded after the number was released. And this is true for all those numbers I just outlined: non-farm payrolls, GDP, ECB, US inflation. We only trade after it because it's so significant and so transformational in the outlook of the market that it's just not worth it to try to, because you're going to be, because the stop, because of the abruptness of the move, you're going to be slipped like crazy. But for certain data, it doesn't matter. If it's US PPI, it won't matter. If it's Australian PPI, it may not matter. We may trade proactively ahead of it. But for certain releases like US CPI, we always trade reactively. But guys, stick around, because Boris is going to be trading gold and the indices.
I put out one last poll for everybody, because to sort of let Kathy know, I'm actually, we're both very curious. Last poll here is, wanted to know if you guys trade prop, like I'm doing right now, which I'll be doing with you after Kathy is done, or whether you trade your own FX, CFD, or futures account. I'm just curious to know what you guys are trading, both with us, for yourselves. It'd be interesting for us to know where everybody's headed these days as far as retail trading is going. So let us know. So far, it looks like everybody's got at least quite a few people are trading. Well, it's actually 1 to 3. 66% trading their own account and 32% trading prop. Really interesting.
Did you give the question of both, Boris?
I didn't want to put both. I wanted everybody. I kind of wanted to force everybody's hand, because I wanted to know where the tilt was, where the primary tilt was.
Okay.
Because my suspicion, and it's kind of confirming, and it's really interesting, is that prop is still a very, very new thing, and most people are much more comfortable trading their own account, or they're used to trading their own account. So that's why it's kind of interesting for me to see. So this is good. I mean, I'm very, very glad you guys are trading your own account. You can certainly use everything that we do, especially what Kathy is doing, to trade your own account, but you can also use it to try to pass the prop, and that's something I'm going to be talking to you about when I get into live.
Let's see, has Euro hit the figure yet? It's almost there. And it's also important to realize some currencies love to tag the round number. Some currencies, avoid it like the plague. And so that's part of what I teach in the fundamentals.
It's a big round number, right? So it's the 10 figure.
Yeah, it is a big round number. So it might be a little tougher. So maybe getting out at 1.1023 could be a good perspective. It already actually went down to 1.103.
Yeah. So, Kate, we have a couple of minutes. Maybe you could just explain to people who are maybe new to FX, or maybe don't quite understand how FX markets work. What is it about round numbers that seems to be so important? Why there's an attraction point there? There's actually, a supply-demand reason for a lot of that stuff. It has to do with where people leave stops, and also where there's a lot of option barriers are. So maybe you could just tell them a little bit.
Well, I think you basically gave the answer.
Well, I know, but I want to explain it a little bit. So
which is that, there's a lot of, in the FX market, retail traders are not the biggest players. And even institutional traders and bank traders are not the biggest players. The biggest players are people doing import-export, people doing corporate hedging, who don't care about Euro at 110.27 or a Fibonacci level or a moving average, support level. They care about doing the hedges at round numbers, because they can write it down in their books. They're not hedging at 1.1012. Right. They're hedging at 1.10. That's what they want. And so they leave their orders with the banks and say, I'm doing my hedging, I'm doing my conversion transaction at this rate. And then the banks execute for them as close to that rate as possible. And that is why these round numbers are so important. And as traders, it's also important to understand which currencies gravitate to round numbers, which currencies reject them. And, those are all very, very important things to share.
Can you expand it? Which currencies have like the highest propensity hitting?
No, I mean, I'm just telling them to take my course.
Oh. Okay. Okay.
But we talk about them a lot.
Actually, you know what? Let me
share what I want to say, which is that every Monday we create a plan, we trade a plan. Last Monday we did that for non-farm payrolls. This Monday we talked through what to expect for US inflation. Next Monday, you guys have to join me. It's FOMC week. We have to talk about what to expect from the Federal Reserve. And so there's, it's very, very important to be prepared in the beginning of the week to basically know exactly, what to expect, what's on the table, and, what are the odds of, which way the data could lean, because it's not just that. We have FOMC, but we also have the UK inflation data. We have the Canadian inflation data, the Australian jobs report, the Bank of England rate decision, the Bank of Japan rate decision. So we actually have 3 rate decisions on next week's calendar. So there's so much to talk about. Make sure you join us 8:45 a.m. New York time on Monday to talk about everything that we're going to expect. And one of the things I did show, and I'll show it to you again because it's valid, is I create these tables. Let me just refresh my screen. And we'll be looking at this.
So while Kathy's refreshing her screen, just letting you guys know that I put in a link to her fundamental course, because if you really want to know all the secrets and understand all of the things that she's talking about, including which currencies run the zero numbers, which do not, it's a great, it's a big nice sale on there. I put the link in there for you guys. Take advantage of it. It's probably the best course on FX you're going to find. It's just really pure fundamental knowledge that can give you actionable trade ideas and strategies inside of it.
So for every rate decision, the big ones, of course, only, we create this table that basically takes a look at how an economy changed. We put ourselves, when it comes to fundamentals, the most important thing to do is to put yourself into the shoes of the central bank, to think like the central bank chairman or president. And to do that, what we do is we look at how the economy performed from one meeting to another. It's quite simple as that. So I build these tables for you. Every Monday, we look at them if there's a big rate decision, and we think about how the economy changed. And so ECB meets tomorrow. They're widely expected to cut interest rates by 25 basis points. But once again, it's not about what is expected, but what is their guidance, what comes next beyond that. And so, the market does not expect another back-to-back interest rate cut. So the question is, will the ECB's guidance be dovish or wishy-washy? And, based upon this table, I think that Lagarde should be a bit more clear on their plan to continue to lower interest rates, because inflation, yes, it's stickier than they would like. But if you look at the middle section, Eurozone CPI, headline CPI is not slowing as much as they'd like, 2.9 to 2.8%. But core CPI dropped quite a bit. And remember, the ECB has a 2% inflation target. So there's a possibility that this could fall further. And so I think that it's going to be cut with dovishness. Now, of course, I could be wrong, which is why we only trade reactively. We don't trade proactively with ECB, because there's so many moving parts. It's kind of like FOMC, where you have the rate decision, and then you have the economic projections that's going to be released tomorrow. That's very important. And then you'll also have the press conference. So there's so many different parts of the puzzle that I think, it is best to just wait for the dust to settle. For us, we're going to be trading the Asia session after that and see what kind of opportunities do we get. But yes, I think based upon this table that they're going to cut and be dovish. And, on Monday, we're going to look at the FOMC table, the BOE table, maybe the Japan table. Japan, they don't really produce enough data to really make it meaningful. But we'll be looking at some of the central bank tables. So make sure you join us on Monday. Don't miss that session. It's the most valuable session of the week, and it rolls right into live trading with Boris.
Yep. Hi, guys. Oh, there we go. I just banked another $50.
Well, what did you do? We didn't even know what trade you put on. Can you roll through it?
You were
not
talking.
real if you don't share it.
I can't share it because you're talking. So I'm going to be sharing 1,000
Okay,
trades with you guys.
fabulous.
I want her to just talk it out, and then we're all going to do my degenerate trading. The degenerate hour is coming, guys. It's coming with thousands of trades. But I just wanted to summarize. And first of all, thank you so much. How great was her trading today, right? How awesome is she? Planned, methodical, patient, the exact opposite of everything I do, right? But that's why we do it, because you guys get to see some very, very different approaches to trading and styles that I think hopefully all of you can enjoy. The link to her fundamental course is right there. The link to get her indicator, which by the way also gives you my indicator, so it's a 2-for-1 link. I just put in right there. And of course, as always, those of you guys who want to trade Apex with me, I'll put in the discount. The discount today, Apex last possible day to get the massive discount. Lock down every account you can. Just lock them all down, because trust me, I'm always regretful. Like, if I'm blowing an account, I'm always regretful that I haven't locked down a couple of more, because then it's just so much easier to just start it up right then from your inventory. Anyways, you did a great job trading today. Tomorrow is going to be ECB. We're not. I don't think we're going to be able to. I don't know if I haven't talked to her yet.
I'm not trading ECB.
No,
BCB is
It's
there's too many moving parts. It's kind of like, you're welcome to trade it, Boris, but because there's the rate decision, the economic projections, and then a break followed by the press conference. It's too. I mean, once again, I can't say this often enough. If you want to win in trading, you want to have a consistency. You need to know when to trade and when not to trade, and what works best, and what is the smartest time to trade, and what is the smart data to trade. Data that's clear cut, and there's an instant, and everything is released at one time, like non-farm payrolls on Friday, as well as CPI today. That's fantastic to trade, because after it's released, there's no more ambiguity. It's out. The whole thing is out at one time. But when you got all these different, there's a change in the projections, and then a pause followed by, what is, he or she going to say or not say. There's too much uncertainty. So at that point, the best time to trade is when the dust settles. And for me, the dust will settle. And BK traders will join me to trade again at the Asia session tomorrow. And that's when we already know the takeaway. And that's how we maintain our accuracy, by making sure that we trade only at the best times of the day, of the week, the best times for our strategy. And I cannot stress that enough. And you'll hear me say it over and over again. It is so important. I mean, days like today, it's done. If the number comes out, we trade.
Right. I absolutely agree with Kathy, and I'll be the first one to admit it. This is, I would say, the single greatest difference between amateur and professional traders isn't strategy, isn't approach, isn't even risk control in many ways. It's selection. It's the ability to select and be patient in your trades, whether you're trading with a fundamental technical combination like Kathy is doing, or whether you're scalping on a purely technical basis. I'm going to talk to you a little bit about how I've improved my own selection, and how you guys are going to be able to see in my indicator exactly the rule set for better selection of trades. But selection is absolutely key. It's the hardest part is not to trade. God knows, nobody loves to jump in with more hands than me, very often, to my own detriment. What makes Kathy so great is she's incredibly disciplined at doing things only when there's something to be done. So that's something really great to take away. Less is more.
I just want to add one more thing. Many of you are on the stream right now. I am certain begging and hoping for the next trade from me. But knowing when to stop is also very important. We made our pips instantly. We had like 8 to 10 minutes of, solid trading right after the release. We had a plan. We sat down. We created our plan together. You can rewatch this video. I talked through exactly, the currency pairs and the instruments that we're going to trade. We had a plan, and I even, if I re-show my screen, you'll see that, I even documented our plan. So there was absolutely no ambiguity, and there's no guessing on the chart itself. And then we took our profits and we stopped. And because this retrace is exactly what happens all the time. And it comes from experience. Yes, I could have traded the retrace, but that's not my personality, because my personality is to go in the direction of, and my strategy is to go in the direction of momentum and data. And so the retrace is actually to fade it, right? Which is pretty valid. It's, it's definitely a valid way to trade, but it's not my way to trade. So I also know when to stop, which is also, is very, very important. And many are saying, oh, euro dollar's bouncing, Kiwi dollar's bouncing, dollar yen's retracing. The only thing I will be looking to do is maybe to, and I won't be doing this right now because we're already past my trading time, would be to continue in the direction rather than, and to, like in the euro, to sell on a rally rather than trying to pick the bottom. Because I know my strategy, I understand the strategy, but I also know when to stop trading as well, which is something that's very, very hard for people to do, especially after news releases. Because when you don't stop trading, that's when you give back all your profits.
Right. The longer you stay at the table, the higher the probability
Yes.
you're going to lose. That's why they feed you drinks in Vegas. And the difference between professionals and amateurs is that we don't drink the drinks. We take the money and walk away. That's the key thing here. So really great trading.
I actually sit at the table for the free drinks. I don't,
Oh,
I don't actually gamble, but I sit next to the people when they come over and I get the free drinks.
Okay.
And so, yes, I'm around the table getting the free drinks, but
Yeah. Well, it depends on your purpose of being at the table, I guess. But yeah, I guess that's a good point. Since I don't drink, I don't even need the drinks. But anyways, there's another question here. Let's see. According to you, how is CPI? Because the data can be misleading, confusing sometimes. For me, CPI was bullish for dollar. So what do you think is good to know? Well, it's not, CPI wasn't extraordinarily different from what the market expected. I think the consensus view is, as we sort of came to the idea, is that CPI was mildly bullish for the dollar in a sense that it's very likely the Fed is only going to cut rates by 25 basis points because inflation was still elevated to a degree that's relatively hot, and the economy is doing quite well. I was actually looking at the undercurrent of the data in the CPI. One of the most interesting positive economic things is that real wages rose by 0.5%. That's quite good as far as income goes. There's no need for the Fed to go to 50 basis points if real wages are rising. And the labor markets are still relatively good. So we're kind of in a perfect Goldilocks scenario right now for monetary policy, and that's why I think they're gonna err on the side of caution and go to
all right. So let me see if there's any final questions. I know you guys are eager to get started trading with Boris. Boris, while you can you tell them what instruments you'll be looking at, because
so,
they can set up their charts.
Again, we can trade anything you like, but again, this is a question of selection. We can trade gold, we can trade NASDAQ, we can trade S&P, we can trade Dow, right? We can everything. Our indicators, you'll see, works on everything. That's not going to be the question in front of us. The question is, what will we trade? Because when it comes to my kind of trading, which is very, very focused scalping, short-term trading, there's really only so much bandwidth and focus we have. Focus is the single most important thing. You guys see me. You snooze, you lose. We're fast in and out, make our trades right away. And that requires you to just focus on two instruments. So we're going to be trading the low risk instruments. And I'll get into it a little bit later as to why I'm trading those. We're going to trade the S&P 500. We're going to trade the Dow, because those on a futures basis are going to give us the smallest amount of risk we need to wager. At the same time, give us very, very steady, continuous profits as we start banking those pips. And I think you'll see. I'm going to go through the mathematics of how all of this is going to work on the prop trading account in terms of both how to get towards the target and then and avoid the drawdown. And I think you'll agree with me that's a really good plan of action. And of course, you guys can oscillate it. Like I said, the indicator works on any instrument, but today we're going to focus on S&P and the Dow, because those are going to be, I think, the best, lowest risk, highest probability to capture profits for us. Yesterday, we had a very, very good day. We did about 1,500 on one account and about 400 on the other account. Let's see what we can do today. But that's the whole idea. Slow, steady gains. One last thing I'm going to leave you with in terms of selection and focus. Kathy was talking about, know when to walk away. Kathy has 100 pip target per week. And she's always been saying that is a very, very core tenet of her success, because what that does is it really focuses her attention and targets a very reasonable rate of return. Now, what's astounding about that, I don't even know what the numbers are, Kate, but correct me if I'm wrong. If you think about this, $100 pips a week is like, if you win every single week, obviously you don't win every single week. That's 5,000 pips a year. That's huge returns. Even on one.
Well, I always, I'm more modest. I say it's somewhere between 3,000 and 4,000 pips a year.
And historically, you have the data. What has it been? I think it's been around the 4,000 pip mark.
Well, I'll tell you the numbers right now. Since the beginning of the year, it's been 2,413 pips.
Okay.
We have not had a losing month since June 2023. Past performance is not indicative of future results. Since January 2023, we have had 5,154 pips.
Right. So
and only 3 losing months. But the most important thing, people are like, okay, tell me about those losing months. Absolutely. 1 month was minus 380 pips. The other 2 was minus 76 and minus 15. So controlled risk. And somebody asked on the stream, what's the difference between the fundamental course and the monthly membership? The monthly membership, you actually get our trade ideas, and you get my zip trades that I'm trading at the New York Open and the Asia Open. The course, you learn fundamentals. It's completely different. One is completely different from the other, although fundamentals is very important to understand the way I think. But you'll also learn it as we go.
The course is a really good complement to, like, it's good if you don't know anything about trading. It's a great way to, you do the course and then you go into Kathy's room and learn to trade with her. It's like a really foundational, great foundation for learning how she trades, because it gives you her whole philosophy of trading and all the key knowledge. And then you're coming in and you trade with her, and it makes it a lot much cleaner. So I recommend, if you're new, get the course and then sign up for Signals, and you're going to have a really good 1-2 combo.
There's also a very valid question here that I want to answer. How can we trade in now around news when the Apex prop challenge discourages news trading? There's a lot of prop brokers that discourage news trading. Hold on. And I'll let Boris speak about Apex specifically, but this is not how we trade every single day. We only trade news, just to show you how it can be done and to give you some opportunities live. But I actually trade, my trades come out at the Asia Open at 8 p.m. New York time and at 8 a.m. New York time. So New York Open, 6:30 a.m. New York time. Asia Open, 8 p.m. New York time. Those are the times of day I really trade. That is not when news is released. So, and Boris also trades. What time do you stream? Usually
we stream between 9:30 and we're going to extend our streams till about 11:30. What I was going to say is, there is nothing that Kathy did today that is a violation of Apex news trading rules, because you need to understand what the prop firms want. What the prop firms do not want is for you to have a hunch, bet a bunch, load up in front of news, and if you're lucky, you make money. If you're unlucky, you blow the account. Take one to burn one, which is a very, very common nonsense strategy. Notice I'm not cursing today because Kathy's on the stream. As soon as she goes off, the F-bombs will start flying. But it's a nonsense strategy, rightly so, because it's not trading, it's guessing. Prop firms don't want that. Kathy did zero guessing today. She did pure trading because everything she did was post-news. You could have followed every one of her trades and been in complete compliance with all the Apex rules. So I just want to make sure you totally understand exactly how the whole thing plays out. The last point I was going to make is, if you think about the idea of 5,000 pips, so 100 pips a week doesn't sound like a lot, but 5,000 pips in a year on one standard lot is $50,000. That is how you make money over the long run. That's what I wanted to kind of emphasize to everybody. This is why her process is so powerful, because it adds up to really, really profitable trade with very, very limited risk control.
Okay, so the last thing that I want to leave all of you is, so we talked a lot about discipline, psychology, the way that I think, and I've got to do a plug here. I actually participated in Charles Schwab's brand new show called Inside the Mind of a Trader, and they actually put me through a brain scan And while I was doing the brain scan, they asked me a lot of trading related questions, and they wanted to see what my brain activity was like during that time. And what was really interesting, and I encourage you to go on my X feed, and it's the video that's pinned. And I encourage you to watch that episode. It's only about 28 minutes or something like that. And basically, what it showed was that when I was faced with a trading choice, I had very low brain activity, which means that it was almost like robotic for me to make that trading choice. Whereas when I was, given the choice between like a green popsicle or a red popsicle, I had to think more about it, about what I really wanted, what the difference was in terms of flavor, and what the temperature was outside. And I had a lot more brain activity in something that sounded so menial versus trading. And I explained why, and I explained a lot of that in the interview with the neurologist. So please, support me, watch the video, and hopefully you'll learn a little bit more about how my mind thinks when it comes to trading. It's called Inside the Mind of a Trader. Make sure you check it out on my X feed. It's the first pins link by Charles Schwab.
Sumar said he's seen the video and he's very insightful. Yeah, it's fun. It's nothing else. It's a lot of fun to watch.
Yes. Okay, so I will leave you with Boris, who will now move on to trading the indices with you. I hope you all have a great time. I had a great time with you all today. And I will see you all Monday for our Monday live market outlook for FOMC week, BOE week, Bank of Japan week. So much going on. So here's a question from Dev. Innocent question. Does the fundamental course contain additional information, more in-depth material than what you already shared on YouTube, which we are grateful? It does, but there's also a lot of stuff on YouTube. It's just more organized in the course as well. And there is more information and much more pointed.
The course also has some very interesting core giveaways, like it has cheat sheets. I mean, it's a great little course that you obviously have it forever. There's no expiration date once you buy it, as a store of knowledge that is permanent. This knowledge doesn't change. This is really the core of how all fundamental trading is done, and she just goes through all the key components. It's like learning any other subject. You have a course, you learn it, and then you'll be much more masterful going forward. So I think it's really.
There's a question. Kathy Boris, what do you think of Ultimate Traders Prop Firm? I love Forex Live. I have never heard of Ultimate Traders Prop Firm. So take it for what it's worth. Like I said, I love Forex Live. They're fantastic as a fundamental news resource, but I've never heard of Ultimate Traders Prop Firm.
Right. Our prop of choice, which has paid out more than $215 million.
Well, it's more like, how many students have you helped pass the prop, Boris, using and actually start getting funded? Maybe we'll share a little bit about.
So first of all, our prop firm of choice, Apex, last day to get the big discounts. The reason why we love them is because they actually make it quite easy to pass the prop test using the techniques that I teach. And if you're interested in using those techniques, I'll be starting my new coaching cycle. Let me just put the link in here. I can't talk and type at the same time. Called Pass the Prop Academy, and this is a great coaching product that I put together that has 3 things that you absolutely need in order to succeed and pass these prop tests. Just to give you an idea, passing the prop test is harder than getting into an Ivy League school. Only 4% of all traders that take those evaluation tests are able to pass the prop test, right? Conversely, 70%, so something like, 10, 15 times the regular amount, pass the prop test when they go with me into pass the Prop Academy. Because Pass the Prop Academy has 3 things to really make you successful. Number 1, it has this particular indicator, which tells you exactly when to buy, when to sell, and how to interpret it. So it's super, super valuable in terms of having a tool set there. Number 2, every week we do coaching where we talk about both strategy, tactics, psychology, and all the best practices from everybody that's in the prop trading world. And then number 3, we have live trading every single day, where you follow me trading live and you follow other people trading live, and the results have been astounding. We're now course of students that have now passed the prop test are now on to their second level, which is taking money out, getting the payouts, which is next level, obviously the ultimate level in successive trading. And many of them are starting to get payouts now. So the same techniques are working really well in all these stages. And that's what I teach you. The thing that I'm going to be teaching you today, and we're going to be using all these techniques, is precisely the ability not to just pass these evaluation tests, but then use the same techniques to get paid. Because one of the other big big things that I think is kind of disappointing when you see a lot of gurus on YouTube is they're very good at doing exactly what I was telling you. Have a hunch, bet a bunch. Take 10 contracts. Let's make 10,000 in one trade. Get passed out. Great. That's wonderful. Prop firms love that. They love that because they know your chance of actually collecting money from them doing this is zero, less than zero, because you're going to blow out your accounts all the time. And one of the great things that we teach you is the process is the same on the evaluation side as on the trading side, because it keeps your risk very controlled, and that's how you pick up the actual P&L on the stuff. So links are in here. What is that? A lot of firms are going.
I'll comment. I actually put out an article on MP funds on our sister website, Prop Trader Edge, and you can read all about it in terms of my thoughts. Basically, Singapore is a strict regulatory environment, and they have gotten stricter, and the prop industry is relatively new. And so, they don't want it within this jurisdiction. They're skeptical about it. It's all, a demo money. And so what happened was more behind the scenes. MP funds, payment providers, and banks no longer wanted to do business with them, probably because they were fearing some regulatory environment. And the article that I posted, which I will put into the YouTube stream, explores what it means for Asia in general, and prop trading in Asia. So I encourage you to give it a skim, give it a read. I just posted it. It's the x.com link. There's a lot of information there.
Yeah, it's a great link. It's a great discussion of essentially what's happening in that particular jurisdiction. But also, if you want to know the broad general idea of what prop is all about, and all of the advantages, pitfalls, and all the things you need to consider, as well as just the general knowledge of what prop trading is all about. I wrote a free prop trading guide, 60-page PDF guide, beautifully laid out, like a really nice, beautiful book, totally yours for free. I put the link in there. Click that link, you get the guide.
Okay, so enough with the links. I'll let Boris get to trading because I think that's what all of you are waiting for. I'm going to say goodbye, and I'll see you all Monday for our Monday live market outlook.
Awesome. Thank you so much. Thank you so much. Very good. Okay, so saying, somebody's saying, when are we starting our own mainstream media channel? Don't you know that YouTube is mainstream these days? That's it's a lot easier for us to run a YouTube channel. Everybody come around here. Speaking of which, by the way, guys, the only thing I ask of you, I'm glad if you're loving the content, if you love the trades, if you love all these ideas, you love seeing me trade every day. I just ask you two things. Subscribe to the channel if you haven't. This way you are guaranteed to know every time I'm trading live. But two, bring in all your friends. Anybody who's interested in trading, anybody who's in your community who's a trader, put out our channel and tell them to come watch me. I want as many people to come in here because what you see is what you get. I'm not a guru. I don't have a freaking plane. I don't have a Lamborghini. We don't do any of that BS. And I don't sit here and tell you how smart and intelligent I am. You see everything that I do, good, better, and different. You see me trading live all the time. You see my accounts trading live all the time. You see me getting funded all the time. All of it is totally transparent. So if you want to have a real experience, and as a result of this is what I'm trying to tell you. Everybody who's in my PTP, everybody who's in our classes is actually having the same real experience of success. That's what I really want everybody to come in. So please let as many people as possible know about our channel. I'd love to see people come on board here because this is trading the way it should be, hopefully. So everybody doing good? Everybody doing well? Thank you, Kay. Let me look around here, see what you guys are saying to me as far as comments. Let's take a look. It's about 9:20. I'm not going to be taking, as much as I'm tempted to kind of want to take a trade right now, I'm not going to take trades. But what I am going to do is we've got 10 minutes for me to walk you through the absolute specifics of what I'm doing, why I'm really, really, really happy now with how the setup is structured, and any questions that you have. So we can do any kind of Q&A, right? So first of all, we're going to look at, this is S&P. We're going to trade two instruments, S&P and the Dow, right? It's the S&P, Dow, blah, blah, blah. Now, on the left-hand side is my BK Scalper 1.0 showing me retrace signals. Clearly, the greens are the retrace buys, the reds are the retrace sells, right? This is the 8-period SMA. The game, as always, is we're buying above 8-period SMA and we're selling below 8-period SMA when and if we get the signals. And this is where the rubber hits the road. This is where this, where I've kind of figured out, I think, the perfect structure for how we want to trade. Sorry, the chart on the right is the momentum signal. So these are retrace signals. This is the momentum signal. We also have a turn signal, but that's an advanced signal. I don't want to complicate things with you right now. The critical setup, right? And much as I'd like to do this, I'm not going to do this now because it's market open. Here's all you need to make a buy trade, and here's all you need to make a sell trade. I'm going to show you over here on the retrace side. The only question you want to ask yourself, here's a retrace signal, right? I have a buy signal. The only question I want to ask myself, whether this is a buy or a pass, is the prior buy signal lower than my current one? Am I higher than the prior one? If the answer is yes, I'm a buyer. If the answer is no, like over here, you see this triangle is below. Even though it worked, I don't give a fuck if it worked, okay? And I'm back to cursing. You don't like my cursing? Mute me out. I don't care. I am not taking this trade. The only rule I've set myself is I'm buying higher high. So the only question I have is the prior green. And by the way, we're going to ignore the reds in between. If there's a red between, the only question I have is, is the prior green. Similarly, on the sell side, the only question I have is the prior red. The prior red is over here, lower than the current red. The answer is hell's no. Then there's no trade. There's no trade to the sell side, right? That's it. That's all I need to do to give myself optimal probability conditions for success. Now, we're trading obviously on a scalp basis. This is how I trade. You don't have to trade the way I do. You can change the parameters. I enter the trade on the close. The candle must close and complete the signal. Because very often at the very last second, it may just completely go down and there's no signal, no trade. So I'd rather be late than sorry. And the rule number one, I'd rather be late than sorry. Rule number two is what do I want to say? I was saying, it's got to be higher highs on the green side, lower lows on the red side. And we're comparing against the prior red or the prior green, irrespective of what's in between them. We're looking at those positions. And how I trade. I'm trading with 1 point target, 4 point stops. It's a very, very negative risk reward ratio. And the idea here is I'm trying to win 9 out of 10 trades. I'm trying to be 10-2, 14-2, 15-2. Because I'm trading one contract on the S&P, my win is $50. Right? My risk is $200, and I'm trading a $250,000 account. I have to make $15,000 to hit my target, which means I have to make 300 net winning trades to get to my target, which may seem like a lot, but if I'm doing 10 net winning trades a day, and I'm actually probably going to be, when I do a lot of this, it's just 10 trades in S&P, maybe 10 trades in the Dow. It's really 20 trades. It's really between 15 and 20 days to get funded. It's a slow, steady method. It's not 1 or 2 days. It's a slow, steady method. But that is a method that ensures that after you get the $250,000 account, you can keep the $250,000 account and get paid out, right? Now you can get larger size. You can do, different approaches. You can say, Boris, I'm going to trade 1-to-1. I'm going to take your signals. And I'm just going to trade 1-to-1. So I'm going to risk 4, make 4, and maybe have like 8 out of 6, eight wins, 6 losses, whatever. It's your approach can be completely malleable to what you want it to be. There's no given rules. The key rules is very specific entries. You want to buy higher highs, higher lows. You want to make sure you buy them on the signal, and you want to make sure that you're trading instruments that are within your risk parameters, right? Okay, questions. Not sure you understand the difference between entry time for R or M. There's no difference. There's no difference. Like, in other words, oh, you mean like when do I trade retrace? When do I trade momentum? Generally, it's whichever one first shows up, right? So if I have momentum, like let's just imagine, I have a momentum trade here, right? And let's say I'm not in a retrace trade. I'm in a momentum trade. I'll take the momentum trade, right? I can flip around. There isn't, as long as you have the higher highs, higher lows, lower lows mentality, you can flip around. That's why I have both. So the stop loss on S&P is 1 point target, 4 point stop, and on NASDAQ it's a 5 point target, 20 point stop. On the Dow it's a 10 point target, 40 point stop, right? The idea is just to clip. So hopefully that's clear. Okay. All right. Let's go. We're going to... okay. Bye, guys. Okay, so we got 3 minutes to the open. We're gonna let the first 5 minutes of the open kind of go through. I mean, I'll take a look and see if we get a little bit of flow. I'm very, very tempted. It's very, very tempting here to actually. Hang on a second. Let me make sure I put the TradeAvate tab over here, so now I'm kind of just can clip through this quite quickly in between accounts. So hopefully this will be make it easier for me to execute. What I was going to say is here's a lower low on the momentum side, right? And we could conceivably take this trade. I mean, you know me. If given a choice, I always want to take a trade versus not taking a trade. And what the hell? Why not? Let's go to TradeAvate. Let's go to the short account. I don't care. Short account I really don't care about as much. Here's the short account. I got about how much time? 3 seconds left. Okay, sell market. Okay, and I'm probably going to eat it again. This is what happened here? Did I eat it? No, I didn't. Oh, sorry. I have both. Let me just close out my other tab here. Oh, it's just tabbing. So this is a perfect example of do as I say, not as I do. Never take a trade 2 minutes before the open because you're pretty much going to sell the bottom, which I did here. And now I'm just basically eating this this P&L here. What did I just do here? Oh shit. Sorry, guys. I'm on the wrong trade. I had to close this out. Sorry. I'm so stupid. I was trading the YM. I actually had the right trade. The trade did work, but I was in the wrong trade. Now, here's the thing that hopefully you guys can all learn from this. When you make a mistake and you were supposed to have sold S&P and instead you sold YM, because I'm talking and it's very hard for me to talk and chew gum at the same time. Just get out. It doesn't matter. Just get out. I was trying to take this trade. Now I have a second setup here in the S&P. Let's focus on this. 45 seconds left. If this thing drops below 5,500, we're market open. I'm probably pretty much going to trade this now. So let's go to TradeAvate. Actually, let's put TradeAvate in between. This way I can look at it. So now I've got the S&P. 30 seconds left. This candle stays red. We're gonna sell this for a trade. So yeah, I ate a small loss on the Dow. Now this is another really good example for why you want to trade small losses, because you're going to make a whole bunch of errors that nobody ever tells you about that I call real world errors, where you're going to hit the wrong account, wrong side, wrong instrument, because that's what trading is all about, especially when you do something super fast. Boom, boom. Boom, boom. You see that? Boom, boom. 50 seconds, less than 1 second left. Why did I do that? Right over here. Momentum trade, done. done, right? So that's what I mean about focusing. When you focus, you got your signals, boom, boom. That was a 50-second trade in less than a $50 trade in less than a second that you want to trade. Another approach that if you want to use, obviously, I'm showing you my way. Another approach that you can use my methodology with is to not go crazy and not to do 20 trades a day, but to say to yourself, I'm going to sort of take the Kathy approach. I'm going to do one quality setup per day. And if you want to do one quality setup per day on a $250,000 account, then you are absolutely, I think, can do this, which is instead of taking one contract, you can do 10. So it's a $500 trade in the S&P, $500 trade in the Dow, right? 10 contracts. Choose your spots. Obviously, you're not going to do it at the front of the open. You're not going to do it in the first 15 minutes of the trade. But generally, I think after 10 o'clock, if you choose the time, get the setup right, you can hit those trades pretty convincingly once a day. That's $1,000 a day. 15 days, you're done, just on one trade a day. So it's 100 different ways to skin the cat in terms of how you want to do it. My whole job here with you guys in live is kind of twofold. One, to sort of show you risk control entries, but also to just show you how to practice the forehand. Meaning that, instead of me doing one trade, I want to do 20 trades with you guys, because that's how you internalize the setup. That's how you understand how the setup works in real life. The more examples of it you see, the more useful it is to you. So that's why I would do a lot more trades as well. Keith banked it very much. Somebody's asking me, they want to get into futures but don't understand how it works. Is there a video with an explanation? I actually have a futures course, which I'm sorry, I don't have a link for you, but you can always email. Let me just put my contact information in here. If you email us, I'll be happy to send you at bktraders.com. Just email me, and I'll be happy to send you the futures course that I made that I think you'll find very interesting. Okay, let's look at this, guys. So now we have a retrace trade setting up. Where's the red triangle? Is it lower than the prior red triangle? Yes, it is. I got 24 seconds left. Let's see if this holds. Now, I'm not even going to switch over to my TradingView platform or TradeAway platform until about 10 seconds left, because remember, this has got to stay pretty red in order for me to feel this trade, right? So 6-7 seconds left. 5, 4, 3, 2, 1. Okay, I'm trying to sell this. I sold it a little bit too early, but let's see if we can get this trade down. So the target is going to be 88.50 on this particular trade, and maybe it's coming back. It might eat me. Does it eat me? Yeah. So I ate the trade on this one because the retrace trade just simply died out. And why? Because it's the first 5 minutes when you have lots and lots of bad movement. Now, this is one of those kind of trades where it's stopped me out and it's probably going to go to target. And it's just, just the way it is. Would I take the trade again? Absolutely. If I wasn't, trading with you guys, but I'm trying to show you good, good practices. So I'm not going to, increase my size here and trade. In my own account, when I do this off screen, the way I absolutely repair all my trades, if I see this possibilities, is I will go for large and repair this trade and just simply take it back, because this was clearly, you can see this. It was just simply a big retrace move, and then it moved down. So and sometimes you're going to get a signal that is correct in direction, and it just will still stop you out because of volatility. Nature of the beast. That's why I trade very, very small. I'm going to make another 10 trades in the next hour, so I could give a flying F about this one. Let's take a look at the Dow. Oops, sorry. No, I know what I want to do. Sorry. Yes. Okay, I want to change my tabs. I'm in the tab mode. So the Dow also, by the way, gave very, very strong signals. Dow is really, really sold out. Markets are kind of, definitely coming down hard, right? NASDAQ is the only one that's kind of holding bid here. So we don't have signals right now. Let's see what the next wave of trades brings us. Right now, I got no signals at all. It's a big drop, 680 to 400. Wow. What is cool? When I have a big drop like this, then I am actually interested in looking at my turn trades. These are trades that I don't, as I said, are very advanced. Same idea with the turn trades, by the way. You absolutely see these are the sell turn trades. You absolutely want a lower turn. So this diamond, which is the turn trade, is lower than this one. That would have been the good turn signal. That would have been a really good signal. Conversely, on the upside, this is. Let me just get rid of. Hang on a second, so it's not too confusing. Let me get rid of the retrace moves. Let's look at the turn trades. Right. Here's the beauty. Here's what I'm trying to tell you. You never buy a higher red. You never. Excuse me. You never sell a higher red. You never buy a lower green. So a higher green. Look at this turn trade over here. Higher green. Boom. Money. Money, right? Over here, this is market open, so it's not. It doesn't really count. But this was a lower red, absolute money. Let's see if we get it. If we get any kind of turn trades on a Dow. Once I get 200-300 points to the downside, or a big move to the downside, I want to start looking for turn signals. George is saying. So a couple of questions here. Age is asking me, do I have stops? I absolutely have a stop on every single trade I do. I'm using TradeOvate. As you can see over here, everything is preset. Everything is, I hit a button, and when you go into settings, the stop and the targets are all set. So it's completely automated. So it can be a microsecond, and it's all going to get executed. So I never ever trade without stops and targets. That's the beauty of it. Sorry, I'm just looking to see what's going on over here. And here's the S&P. Then George is saying to me that a 4-to-1 can be negative if you get clipped out mentally. Yeah, you're absolutely right. That's why I say you are welcome not to trade my way. You can trade with a 1-to-1 risk-reward ratio and trade that way, which is very, very comfortable. The reason I trade this way is because I'm very comfortable repairing these trades. Right? I know exactly how to repair them. I know exactly when to go in large and repair them. And because what I'm looking for is 10, 12 winning trades in a row to complete my my P&L. So I don't trade Bitcoin. I don't trade crypto at all. I don't understand crypto. And again, this goes back to knowing what as far as trading goes. And by the way, this can also be used very much on longer term charts with really, really good signals as well. So if you're not limited to scalping, but scalping is the best way for me to trade very small risk with very steady return. It's also very much my personality, and it's also the single best way for me to show you as many examples as I can within the next couple of hours of us hanging out here. So we should hopefully have 3, 4, 5 more signals, or 3, 4, 5 more trades, maybe 10 signals that we can take. And see if that works out. So we have our first turn trade signal, and as I said, we never buy a lower green. So if we get a higher green, we'll take a turn trade signal on the Dow. Dow has had a big collapse. When we have big collapses, that's when I like to look at my turn trade signals. When we have big rise, the other thing is, do you do the same thing on the short side? Not as much, and I'll tell you why. Stocks are a long only asset. Stocks are much more favored to go up than to go down. So whenever you have big declines in stocks, the turn to the upside is a much higher probability than a fall from a downside. So I like to, if I'm going to be doing turn trades, they're much more biased to the upside than they are to the downside. Does that make sense to everybody? You guys feeling me? Okay, let's see if there's anything on the S&P. Oh, S&P has let me look it up. 31 seconds retrace signal on the S&P. So it's a lower red, right? Let's see if that gives us a chance here for a trade. 19 seconds, 18 seconds. Staying very patient until the candle completes. And actually, my mistake with the other trade was I came in, my execution was just a little bit off. So I'm gonna wait till really no seconds are left on the candle. Okay. And of course, now I sold the low. Let's see if this works. There we go. Boom, boom. winning trade. Now, George, you're asking me what would I have done? What would I have, like, if I was trading, without, without you guys watching? Because I want you to do sort of like, bad habits. I would have easily, no problem, done 5 large instead of 1 large, because that's a 250 win against a 1,000 loss, and I have a 6,000 limit on this thing. So it's a even if I lose, there's nowhere near I'm battered. But if I'd done that, that puts me right back into net P&L category, and I'm done, right? You could also do what I was talking to you about. Just do 1 trade. Just do 1 single trade. This was a clean setup. Maybe a little too early. It's 9:40. I don't want to do clean setups till about maybe 9:45, 10 o'clock. But this was a very, very clean setup. So you could have done this for. Oh, no, sorry, not even 10. I take it back. I would have done. I said 5 large, right? So 250 against 1,000. But you can also do this for 10 large, which is 10 contracts. That's $500 against 2,000. You would have had $500. Walk away. You're done for the day. You can also do this with your own account. I mean, that's the other cool thing is if you're trading your own account, depending on how your risk tolerance is, would you like to make $500 on 1 trade, walk away? The reason why this works so well in the S&P and probably nowhere else is because it's extremely easy to make 1 point in the S&P, and the S&P is massively liquid, right? It's incredibly liquid in terms of its ability. It's got at least 50 to 100 on each level. So if I'm coming in at 10, I'm guaranteed to get that executed. I'm not going to be sweeping the ladder. And sometimes it's, see how fast it's moving, by the way. But if you look at the amount of execution done at each particular level, I don't have level 2. There'll be a couple of 100 contracts. So 10 up, which is, seems like a lot to a retail, it seems like a lot in the marketplace, is nothing for this market. And it's a lot to an individual person. $500 win to an institution means nothing, but to an individual person for 1 minute of worth of work, it's great. It's great money. What is the footprint on the left? This is the bid direct. What is it called? DOM, what's the DOM stands for? Depth of market. It's a depth of market ladder. So these are bids. These are offers. They go really, really fast, as you can see. When you see my mark, when it slows down a little bit, you'll see that when I buy, you'll see my mark over here and my stops and sells on both sides. So I have a stop and a target on both sides of the equation. You'll see that as it goes. Okay, so here's a example of me using a little bit of my own judgment, and you have to use some judgment. You had a very, very steep decline, 508 to 4. So that's a 30-point move in the S&P, right? Actually, let's take a look at my turn trades. Still no turn trades. So just to give you an idea, if I get another diamond, green diamond over here, that's not a trade I want, right? I really need this thing to curl up, come back out, and turn around at a higher level for me to get interested. So again, a lower green turn is see how, like, this is a green, this is a lower green, this is a sucker trade. It's got to be only a higher green turn. So no turn trades for me. We're actually now dropping like 300 points in the Dow, really starting to sell off hard. 1.13%, 0.5% in the S&P, and Nasdaq is the only one that's holding bid really well. So what I was going to say is, when you had very, very steady, steep declines, I may pause. Like right now, this would not be a sell. I made 2 quality profits here. I'm going to wait. I'm going to wait for prices to consolidate, because the only danger with my strategy, the main danger of my strategy, of course, is more strange, but the main danger is I'm selling lows, buying highs. And the way you avoid selling lows, buying highs is by not being a constant degenerate. You have 1 quality trade, 2 quality trade, stop, give it some time. Yeah, sometimes you're going to get 5, 6 green moves around. You only take 2 of them over here. You take 1 of them over here. You should be grateful. You should be grateful that you took 3 winner trades out of 6 possible winning trades. Don't be a greedy F. Don't be a greedy F, right? That's the key thing. Okay, lots of questions here. Oh, Yeah, so George is saying that he kind of agrees with my, with my approach that, you have to have a little bit of experience. So this is yet another reason why I love teaching people prop, because you can do a lot of stupid things without paying a lot of stupid prices. Like, if I said to you, if you were trading your own account the way I do, getting large on a repair trade, you're wrong. It's $3,000-$4,000 of your own money burnt. You couldn't, up from now until the end of the year, if you spent like a drunken sailor on, like, I think, what would that buy you? 5,000 will buy you 100 prop accounts, right? You couldn't trade through a couple hundred accounts if you tried, right? If you were unless you're complete. Just to give you an idea, I went on tilt a couple of times this week. The total amount of accounts I purchased was 3, right? These accounts, I'm pretty confident I'm going to be able to trade to target. I have 5 accounts that are sitting in inventory that are funded. I'm gonna try to get these 2 accounts to be funded, and then we're going to just trade live accounts. Even if I blow up my live accounts, what have I lost? Nothing. I've lost, my entry fees, or $100, $85 entry fees, whatever. You can do a lot of stupid things in prop and not pay the price. That's why I love prop. Okay. And if you do a lot of smart things in prop, you get the reward, you get the money. So it's a really asymmetrical bet. That's why I really love trading prop as a trade. Yeah, Massimo, you were telling me that, to go long S&P, and now we're eating dust, my friend. What's going on here? Now we're really starting to eat dust. Now we're starting to make fresh lows here. I probably should get short. Okay, I'm a little bit late on the execution, so I'm going to let it go. Oh no, that wasn't. So that was we had a. I'm looking for signals here. Actually, you know what? Let me look at the retrace signals on the Dow. Dow had a lot of retrace signals. I was so focused on turns. Okay, I have a very, very deep meaning that it's super oversold momentum signal. So I'm gonna hold off on the Dow. And I had a couple of nice retrace signals on the Dow, which I should have done. I put the turn signals on, and it was a little too early. Let's go back to S&P. S&P, S&P would have worked here for the momentum signal. If I got short here, that was 66.25. Yeah, all of this would have worked. But it's been such a strong sell-off, very unusual in the first couple of minutes, that we have, we'll just wait. We'll give it a few minutes to see if we can consolidate. What I'm frankly looking for here is actually some leveling out and perhaps a turn to the buy side where we can start getting some buy signals on here. Right now, there's just nothing to do. This was a good signal. This was a good signal. This was already problematic. This was a pretty decent signal. This was already problematic. Now, both of these would have made money, but they were very problematic because you were selling it's too steep a decline, right? When you get that kind of a decline, it's just too steep. Trading is always a combination of science and art, and the art part of it is to understand when there's so much steepness in the curve. Don't be greedy. You had 2 great trades. We took them all. They banked us out. Now we just simply wait, give us a little bit of time, see if we can get the other ones in there. Yep. What is the EMA? This is a 8-period SMA. It's not even an EMA, my friend. It's an SMA. I keep it super simple. Why 8? Because it works. It can be 10. It can be 5. 8 is a beautiful little combination of short. Basically almost everything that's in trend is going to be circumscribed by the 8 SMA. When it's a nice big trend, it's going to stay above. When it's a nice downtrend, it's going to stay below. Right. So there's no reason to press. One more retrace trade that actually is making a lower low. Let's see. 22 seconds left. I'm going to watch this. The other thing that I want, by the way, just one last thing that if you're looking at it, by the way, see how this is coming back on me. Here's what I want. Let me show you big time, like kind of big. This is actually not a bad trade. Is I want it to close at the end of the candle. Probably not a bad trade. Let's see if we can get this move. Boom, come on, come on. And see, I took the trade, I made the money. Why was this not a bad trade? So my apologies. And I've said this many times before. I got to trade first, explain later. Because as you can see with my setups, if I sit there and try to explain, I miss the trade. So what made me make this trade? I think it's actually kind of probably more valuable if I just trade first and explain later. Because you guys, the longer you guys hang out with me, the less I have to explain. So let me get bigger here and I'll explain to you why I made this trade. So one of the critical things I want to look at whenever I'm looking for a signal is obviously I want a lower low on the reds, lower low retrace, right? We see that. But the second thing I really want is for the close to be 50% or lower in the body. So it's got to, ideally, I want it to close on the lows. If it closes on the lows, that's a momentum trade. If it closes on the highs or near the highs, but still give me a red signal, that's nowhere near as good. If you notice, the really, really good trades pretty much close on the lows. You will get sometimes, you will get pushback over here. In this case, this was just simply, massive, massive. Oh, so, okay. Let me sort of show you the other. I might as well just explain to you the full. Where am I? Here we go, rectangle. So why would I have not taken this trade? There's just a couple of rules, more sophisticated rules that you want to keep in mind for when you're doing the interpretation, the art interpretation. So I want it to be a selling candle, so lower lows, right? I want it to close on the lows, but I don't want it to be super large. What is super large? Anything that is greater than my stop. Remember, my stop is 4 points. This candle is 71 to 78. It's fucking 7 points large. It's twice my volatility. So I can be right and wrong. If I'm right and wrong, I don't want to trade this. What I mean by right and wrong is I'm correct on direction, but still get stopped out because the volatility on this thing is so huge that the natural, retrace motion, remember, stocks go up, down, up, down, up, down. The puke back job was so large that it took me out before it resumed its move down. So those are the things you're looking for when you're trying to be interpretive. When you're trying to be interpretive with the setup. Parth is asking me, do I copy trade? I do not copy trade, Parth. I don't copy trade, not because I have any kind of a philosophical objection to it, but again, it comes down to focus. I don't want to multiply my mistake 20 times. I know the answer is that you multiply your wins 20 times, but you also multiply your mistakes 20 times. I'm not. I personality wise, I'm a very serial person. I want to do one thing at a time, one thing only. You can see not only do I not copy, I actually segregate my accounts into sell accounts and buy accounts. I have an account for shorts only, and account for longs only. Right. So I'm a person who kind of just simply likes to keep things very, very very, very contained, right? I'll tell you something funny. So, who remembers Bernie Madoff? Anybody remember Bernie Madoff? Right, the great con man, Ponzi scheme. You guys remember him? Is my audio choppy, guys, or you guys hear me okay? I hear myself okay. I just want to make sure. There's the New York City siren blowing around. Everybody's good. Hear me okay? So, so I was going to tell you a funny story. So, sort of like my own to understand my personality. So when Bernie Madoff got arrested, right? Like this was in 2008, I forget when he got arrested. They talked about the fact that he had 10 of the same dark blue suit with the same belt and the same black shoes in his closet, right? And I was like, I went to my closet at that time because at that time I used to, I haven't worn a suit in like the only time I'm going to wear a suit is for Rosh Hashanah services coming up in October because now we do everything on TV remote and I'm just wearing my sweaters. But like then I had to go to the studio all the time, so I had to wear suits all the time. But the funny thing is, I looked in my closet and I had 10 of the same dark blue suit with the same black shoes and the sweater, and I was like, maybe I should really worry about myself, just to show you how much of a, compartmentalist I am in terms of this. So yes, no, I'm not a psycho like Bernie Madoff, but I definitely had the tendencies for it. Anyways, what was the question here? Matrix, I don't understand your question. Am I doing 34 on stops or lower? Can you rephrase the question? Because I don't quite understand what you're saying. All right, we're starting to turn a little bit. Maybe we get a little bit of a turn in the market. The market now is down $1.15 on the Dow, 66 basis points on the S&P. Let's take a look at the Dow. Dow is still sending us short, but here's a cool thing about the indicator that you guys are going to love. So one of the cool things you can see here is how the retraces are getting higher, right? They're getting higher. What that's telling you is that the sellers are kind of losing their momentum, right? Lower triangles mean there's more push to the lower side. Higher triangles means that there's, they kind of limited themselves. This 40-30 level seems to be a little bit of a, at least a pause. So we can use our indicator to kind of get a good idea for where the pauses are. Now, remember, Marty Schwartz was probably the greatest individual pit trader of 1980s. He wrote a great book. By the way, people asked me yesterday. I was on a podcast. Somebody asked me, "What is one of my favorite trading books?" So this is a book. Let me see if I can find it. I'm gonna find the link for you guys and I'll send the link in here. Hang on. This is a truly underappreciated book. Let's see if Amazon can find it. Here it is, Pitbull. Not Pitbulls, Pitbull. I'm gonna put this link into the chat. Very old book. Everything is kind of old-fashioned in this book, but it's literally, in my opinion, one of the greatest. Why is this? Oh, fuck this link is too. Oh man, this link is just way too many characters for this chat, guys. Sorry, I can't put this in here. Why is this? I'm sorry, I can't put this in here. Anyways, the book is called Pitbull. Google it on Amazon. All right, great book about kind of the the adventures of a guy who really just did it all by himself. It really was really a pioneer. I think one of the better books on trading I've seen. All right, we're breaking to fresh lows on the S&P. So we'll just, we'll hang tight. It's all been selling. It's just, literally we haven't had a single buy trade. It's all been selling, right? Just all reds. We took all the reds that we could, and now we're just kind of just waiting to see what we can do next. Let's see if there's any questions here. No, I don't see any more questions. So yeah, I mean, theoretically, these are all signals. Practically, you have to select, right? The first 2 or 3 signals were excellent. Now, the probability that we're selling the bottom becomes much higher. The longer you go, the higher the probability that you're selling the bottom, that you're buying the top. So you get cautious. You don't have to, you don't have to take every single signal. I'm not. I'm just chilling right now. I'm trying to see if we can find even a modicum of support here. Let's see what the S&P, what the Dow is doing. I really, by the way, I love how I laid out my chart now with the Dow and the S&P in between my execution platform. This makes it so much easier for me to trade, because yesterday I was just cursing up a storm because I had to switch screens. I'm kind of like really, I think this is going to be our new layout, as far as stuff goes. But yeah, anyways, get Pitbull. Great trading book. I forgot why the hell I thought of Marty Schwartz in relation to what I was saying, but it's just a really good book. Click on the share tray for short link. Oh, thank you. Okay, let me see if I can do this. What is a share tray? Oh God, this is like, where's, oh, here. Is this it? Copy link. Okay, let's see if this works. Oh, you're right. Ooh, thank you, Fortic. Thank you. I'm like an idiot savant, you know. I know how to trade my indicators. I'm lost. Making fresh lows, guys. I'm trying not, I was trying not to be aggressive, but today is a day where just every signal is a sell. And by the way, there are guys in my room who, if you have this approach, if you have sort of like if you have a sort of a trend-based approach, who will milk this? They'll sell the first signal over here and they'll go for like 10, 20 points instead of 1 point. My point is that the indicator is so great at not just doing my little scalp trades, but actually showing you once you find the trend moves, absolutely, great trend moves. As far as that goes, I want to just check on one thing here with you guys. Let me just see something. Oh, cool. All right. The other thing I wanted to share with you, because a lot of people have asked me this. Scott is talking about today. By the way, Scott is absolutely right. I'm a New Yorker, so this has a very personal meaning to me because, of course, every New Yorker knows somebody who's had this tragedy. I was here during the tragedy. Fortunately, I wasn't downtown. That was the only thing that saved my life. But I've been to that place. Literally, I was in that place like maybe a week beforehand. Today is 9/11, so just a moment of silence for that, because show some respect. Fortunately, it was a long time ago, and we've never had the repeat of this. Although I fear we might. Anyways, back to the markets. It's hard to believe it's so long ago. I lost my train of thought. Oh, that with trading the continuity trade here, this is a really, really strong trade. I mean, I had a feeling this was going to be kind of negative news when Kay was talking about CPI. I didn't think they were going to dump the first half hour. But one of the things that you can see about the market that I think you find interesting, let's see if I'm right about this today, is that so we have the first half hour of dump. Generally, the next half hour is going to be consolidation and some attempt at a counter trend move. So we're going to try and see if we could find a counter trend move on this thing. Now, you guys want to have some fun, just sort of like do a little bit of degenerate trading. Now, I'm going to do this just for fun. I bought the micro contract. This is like literally a $5 trade just for fun, just to kind of test out. Like when I have a thought or a pattern that I kind of want to test out, I'm always willing to do it on a micro contract because I could give a flying F about this P&L because it's not even a nat. But here's what I kind of and the thing made money. Here's what I had a thought about that kind of I found it interesting. You know how basically all of my trades are continuation trades. They're always telling you continuation, except, and this is where it gets really interesting, except when we have a super, super long sell-off constrained by the 8-period SMA. And guess what we have now? We have the inverse. We have the higher retrace. This signal was at a higher low than this one, right? So what does that tell me? That there may be a potential for a turn trade, right? In other words, because this was a higher sense, we could have a bounce trade. So I just decided, hey, let me take a bounce trade on a 1 to 4 basis, and then that obviously worked for a small move. Now, is this a bounce trade? No, because this particular signal is actually a lower low. Like it's making a lower low than this one. So you're not going to go try to fade this move. But when you have kind of a fadeable structure, you could just take the signal the opposite way. The beautiful thing about reading all this stuff, the more you're trading it, and by the way, look at this, now it disappeared, and now it becomes essentially a turn trade. So you can kind of read a lot of interesting early warning, early potential things. There are those of you guys who love to trade turn trades, and this kind of stuff just simply is mana in heaven for turn trades to go. They very much thought that this is sort of still, bouncing around, not really making fresh lows. You can see the market hasn't made fresh lows. We could try to do one more time. Let's just do one more time. Let's see, let's see if it works again. Again, tiny little amount because I'm trading the micro, not the mini. So it works. It works. It doesn't work. It was just a little test. This one wasn't nearly as I wasn't nearly as confident on this because this was a lower low. It's probably still much more of a momentum trade than a turn trade. That's what it was. So I shouldn't have taken the turn trade. But it's kind of worth watching this as lots of interesting complementary things for us. Well, while we're waiting for trade setups, we can do a lot of. It's a way to fuck around and not find out. When you're trading $5, $10 trades on a $250,000 account, you're not going to find out. You could care less, but it's a fun way to fuck around. Maybe what's the target on this? Let me just see. MES, it's 55.75 on this, right? On this, oh, I was trading two contracts. Wow, $10 risk. So I was trading two contracts on this, tiny little risk. If it goes 55.75, I'm done. If I get tagged out, I get tagged out for a whopping 40-point clip. But you can see how taking small contracts lets you practice, like practicing tennis, on a slow stroke. Let's see if this comes up. I'm kind of curious. 55.75. We're going to sweep it. And those of you who are trading small accounts, there we go. Come on, baby. By the way, you see this, how many contracts there are? There's 60, 70 contracts at this levels every second. So there's so much liquidity here. And this obviously goes for the large contract too. That, as I said, you can do 10 quality trades and it will work. It will totally work. So, what are we seeing here? We're basically seeing some signs of stabilization. That's all it is. And we're just basically, twiddling our thumbs, having a good time trying to see if it kind of stabilizes. I'm actually curious. Let's take a look at this. What is the YM? The YM is still making fresh lows. The Dow is still making fresh lows. It's still still a sell. Although, this is already like the 10th low. So not one I'd want to be selling. Although, it wouldn't be a horrible idea, but let's see. It has to hold. Now again, this actually would not be even if I was going to be selling it. What's the bad part about this particular setup? Well, first of all, it disappears. But what's the bad part? This is in the upper end of the candle, right? It's not ending on the lows; it's ended on the highs, and that's what does. That's what makes me a little bit cautious about this particular trade, right? Even if I was going to take it, but it's this already seventh trade over there. So, who wants this? And you can see it kind of reversed itself out as a trade. We got clipped on the S&P while I was putzing around, which is fine. Let's see. Be patient and see if we get an actual setup going our way. This is a lower low. Just maybe a little bit. It was just a little bit too early. This is the thing with turn trades is you're always going to be a little bit early on some of these setups. But this is just us waiting to see once we start getting green triangles and hopefully get a turn in the trade. Let's see what the Dow is doing. All right, Dow is finally starting to turn. So maybe in the next couple of minutes, we start to build some green momentum trades, and then we can start trading those as we go. George is saying, on days like today, you can just use SMA as a trailing stop. You're absolutely right. If you're a positional trader, you can use the SMA as a trailing stop. Super, super valuable. The trades like today don't really happen quite a lot, but occasionally they happen. And when you do, trailing these stops is always a really, really good idea. Just curious, I'm gonna put on the turn trades just to see if there's anything, if turn signals, if there's anything showing up. Okay, so you see, like, these are all lower greens, but now we have a green here. Now, if we get a next turn signal, a higher green, that's actually going to be a really interesting turn trade for us. We may even be able to do a turn trade if it shows up. So I'm going to keep the turns over here, the retrace over here, the momentum's over here. Now we're going to start watching and see how it goes. Let's see what the S&P is doing. S&P is still making fresh lows. Wow. This is really like trying to catch a falling knife. Notice I'm really not catching a falling knife, but I'm also not selling the day's lows today, which on a momentum day is a good thing to do, but it's just not a good behavior to do. Like, the exception exactly does not prove the rule. It is an exception for a reason, because most of the time this kind of move is going to be selling the lows. So I'm just waiting patiently until I get actually a turn on the move. A pretty horrible break. I guess now the market is convinced it's going to be 25 base points, so it's not going down. George is saying he's up $1,100 on a trade. Good for you. What are you trading, George? Are you trading which instrument? Is it the S&P that you're on, which is really, really awesome? Yes. Good job. Good job. All right. Dow is trying hard to kind of bottom out. The S&P is still at the lowest 47 area here. It's always very easy to say, oh, you should have sold all of this, and I agree. You can't help but double guess yourself all the time. But if you want to have good behaviors, that this kind of a move is very rare. It happens 1 out of 10 days. So if you do this every single day, 9 out of 10 days, you're going to be selling the lows. So I'd rather not capitalize on every possible move on a day like today than to constantly be wrong on days that are not like today. But it's a really impressive move. So we have not broken the 8-period SMA in more than an hour and a half. That is unheard of almost in the S&P. So here's Dr. D is asking a question that seems like a simple question, but if you've traded for a long time, you know how difficult the answer is. He's saying everybody's down. All 4 markets are down. Do you recommend to just stay short for the rest of the day? And like the very obvious, easy answer is to say yes. But if you know anything about equities, if you know anything about trading, there's almost never a day where we start down and pretty much stay down, right? Yeah, occasionally, one out of 100 days, you have like really negative days. Most of the days, what happens is if you decide to hold your shorts, they're probably going to go right back up to at least half to maybe 3/4 of your entry size and blow you up. So holding your shorts at this level is generally speaking, today may be an exception to the rule, but generally speaking, not a great idea. We're probably going to rally it back up. Now, there may be a second wave at 1 o'clock in the afternoon for the sell side. You're absolutely right. That could happen. But, for now, not my tactic that I would do. In the meantime, we are breaking just all lows. It's unbelievable. Every single trade to the downside. The turn trades are just not coming yet. Wow, unbelievable. Look at this. Look at the Dow. Fresh lows on the Dow. Okay. you really, really want to take this short, right? And it could definitely work. But here's another reason why I don't want to do it. It's a 120 to 200. It's an 80-point candle against a 40-point stop. So I could be right on the trade and wrong on the stop out. So I'm just not taking this trade. Hard as it is right now, I'm not gonna force trades until they start showing up. These are all good signals, but they are very deep in an oversold condition, and the probability of these signals stopping me out, which if I'm trading myself, I really couldn't care less. I would have taken this out. If I get stopped out, I would have reversed. But I'm trying to just not show you like the worst of my habits, because everybody's, or maybe I don't even know. Maybe I should show you these habits. You guys can learn the hard way, blow up a few accounts. As long as you guys are doing it on prop, I have no problem with it. If you're doing it on your own accounts, which what the kind of stuff that I do, I really don't want to do that. That's why I'm really trying to be a good trading citizen and just show you only disciplined approaches. Sumar, email me at contact and I'll set you up. Okay. You have all the wrong information. I think I emailed you back, but you must not have seen my email. You have all the wrong information for our room. So here, let me give you anybody who wants to reach me by email, it's contact@bktraders.com. Okay. Just email me there. I'll take care of you. Okay, so here's what I mean about being wrong, right? Look at this candle. It's an 80-point candle against a 40-point stop. I short over here at 20. It goes up to like 57. Maybe I survived. Maybe I survived the stop, but barely. It just becomes a very, very problematic trade, right? Very problematic trade. Wow, look at this, guys. Holy shit. All right, so I was going to say this is a lower low, but no, maybe it is. We'll have to see. If this Dow holds over here, again, not a trade. I'm just putzing around, but I'll take a long on this thing, on the MYM. This is really nothing. Buy market. All right, let's see if this, just for fun, where's my YM? MYM. There I am. So it's 24 against the 34 stop. No, 34 target against the 104 stop, and boom, boom. And again, nice, just made a little bit of money for shits and giggles. Why? Again, I'm just sort of, I don't want to be selling the lows. This was a higher low, barely a high low. So I took the scalp to the upside. This is just me fooling around because after 12 consecutive red triangles is not the time to short the 13th one, right? You bought on that long candle. Where did you buy, John? Which candle did you buy it on? You bought on this candle? You mean like you bought the bottom of this candle? That's probably not a bad idea. But I'm just fooling around with a few signals. Here's the S&P. All right, maybe we can do the same thing in S&P. Like this, I'm kind of curious if, like, you see how this is a higher low on the retrace, kind of bottoming out a little bit. If it sort of stays here, I actually think the S&P probably is going to go green. But now let's see if this works. $16, $17. Again, I'm going to go back to my little. This is all. I'm trading micros, guys. Right? I'm trading micros. Maybe I ate this. Oh no, this was I rushed the trade a little bit. I wasn't watching the trade. It actually was wasn't a higher low, it was an equal low. So we'll see. Just again, fooling around, trying to pick bottoms because with very, very small size because I don't have anything else to do. $28.75. Oh, this is the day's low. This little red number. Wow. You can see on the DOM, it's interesting to watch the price action. You see how the sellers assault. It's like a battle wave. Assault, 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 defense, assault, defense, assault, defense. Then if the assault fails, they start to retreat, and the buyers come in. Right now, they're still making another assault. They're still trying to make that assault on the lows of the day, right? And they may succeed. It looks like they might break it. We'll have to see. But you can really see on the DOM when you look at the price action exactly how those waves work. And that's really the foundation for a lot of my strategies is from watching this this wave action at work and making sure that I'm trying to ride the waves. Right now I'm fighting the waves because I'm just being an idiot. But generally, the whole point of my strategy is to ride those waves, to make those moves to the upside. So here you see how the buyers have started to pick it up, and now you saw how they finally turned around. Now what they did is they turned around, they recovered the 8 SMA. So now you have this big burst up. So now for the next 4 or 5 minutes, we can watch this and see if there's actually any kind of a foundational bottom, right? And the beautiful thing about the indicator is it's going to take its time before it gives us signals for a foundational bottom, right? So Tommy says buy NASDAQ. You may be right. I mean, NASDAQ got demolished. Wow, NASDAQ also got demolished big time. That's interesting. I'm actually curious. Hang on a second. Let's do this. I think we could trade NASDAQ. I could trade NASDAQ with you guys if we just simply do the small NASDAQs. And that could give us more trades. And then you guys can actually mirror me each way. Oh, this is really cool. I think I can do this. I can do this, 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 this. We can totally jump around. All right. So yeah, we can. This is the small NASDAQ. Let me just make sure that I have it on my trade evade. Yes, I am. That's it. All right. So first, sunshine of green. We don't take that green. We want a higher green, right? So we would need a second green that would be higher than this circle for us to be able to take the trade, right? Right now we're going right back down. Very, very typical where we test the lows again. The market is kind of testing lows, seeing if there's more sellers coming in. Not much happening right now. Dow has a green signal. NASDAQ has nothing. Actually, I think we can totally trade trade the small Nasdaqs. I mean, small Nasdaq is not going to be what is that? If I go 5, is that it's a 1040 trade. It's a nothing trade. We could maybe even make it 2080 if I wanted to. But yeah, we could. If I trade small Nasdaqs within my larger size, they could give us more opportunities for trades, and you guys could have more fun with it. Let me make sure that I have this set up actually properly. Yeah, it's all correct. It's all correct. Okay. I'm just waiting, waiting to get some good signals over here. Now, I'm watching the Dow here, right? And here's what I want to share with you. So the Dow had we had a little bit of relief when went above the 8 SMA, right? Now, what I was going to say to you, if it went above the 8 SMA and then came back down, gave me a lower low red again, like right now, this is actually going to be a sell signal for me, because what it shows you is that whatever relief they had above the 8 SMA couldn't hold, and there's just a little bit more selling going on. So we could definitely. I'm waiting for this to actually tell me if there's another retrace sell to the downside. But right now, so far, it's turning. It's not really showing me anything. But a good way to kind of understand relief of trade is, and I probably could have taken it over here, is when we cross the 8 SMA, come back down, reestablish a sell signal. It's really worth it. Let me just see. I'm going to wait. Yeah, it's not doing it. Is it? No. Maybe on this candle. We'll see. Clearly going through a little bit of a transition mode here. Oh, we have a first. Oh, okay. We got first green shoots over here on the S&Ps. But here's the interesting point. They're not higher highs. They're lower highs, green shoots. So we're not taking them, right? We're going to stay true to our directive, which is that we got to have higher highs on the greens. So this is the second momentum trade, but very, very low from a lower point of view. Not taking it. How's it on the NAS? Same thing on NAS. Just starting out, so we could actually watch NAS a little bit. You know what I'm going to do? Let me just bear with me a sec, guys, because I'm going to watch NAS. I'm going to watch the S&P. Oh, here we go. S&P showing me a second signal. So we may actually have a trade here on the S&P. Let's watch this. Man, that's a big crush. From 550 to 429 in the S&P. Really, really big decline. No setup so far. 29 seconds left. This has to rally for us to. Oh, I remember why I brought up Marty Schwartz. So Marty Schwartz Pitbull had one of the greatest lines ever, because he was such a great day trading price action guy. He used to say you can't go from first to second without going to neutral in between. And his whole point was that, both when you're trading, the whole idea is if you're trading and you're losing, you need to stop losing before you can start winning. So that's the point of having stops. But also with price action, as you can see, it's very rare the price action that makes a V-shaped recovery. You basically have a down line, then it's kind of a neutral, and then perhaps we go into second gear as we shift back up. So the maximum applies on both ends, and it's a really, once you see price action for a while, you totally understand how that works. S&P doing this. I'm going to make a duplicate of this and just watch this on the other side here, off screen. So okay. NASDAQ is showing a second. We're going to go back to NASDAQ because NASDAQ is actually showing us momentum sell. So remember, went above the 8 SMA, now established possibly a second sell point here. So we got to watch this. If this thing closes negative, we're going to sell it. Oh, big move. Although now I'm going to have to hold off. It's 56 to, yeah, it's a big move. I have a 20-point stop, and it's a massive, massive candle. Remember I said we don't sell huge candles. Yeah, you know what? Okay, what the fuck? It's a small contract. Oh, where's my thing? $16 is my stop. 16 is my target. Sorry. Wow, it's kind of frozen on me. What's going on over here? What happened to my thing? Okay, so that worked. I did it against my better judgment. I sold the momentum to the downside. The reason why I did that is I have too many windows open. Let me close some of these windows. Yeah, it's affecting my execution here. All right, we're gonna have to just sorry guys. Trying to kill this this thing. So, okay. Now everything is back up to normal. Okay, good. It just too much. I was stressing my computer with. I literally have like 8 here, so I think it was just the Mac was having a hard time. Sorry, let me just stabilize on all my screens for a second. So what I was going to say is why did I short this move, even though it was very problematic, and it was definitely problematic, because there was just a lot of momentum to the downside. And sometimes a big candle will tell you there's more continuity. The only time I will do a big candle move is only after the first break of the SMA. So this is the beginning of a possibly new negative wave. And there was a big candle move. So, okay, maybe I took the short here and it kind of worked, but it was, not a recommended trade generally. The big rule of thumb is if the candle you're taking a trade on has the length of the candle longer than the stop of your trade, it's too big a volatility candle to enter on. Most of the profit has already been affected. Okay, am I not freezing here, guys? Am I unfrozen now? Is everything better? Give me a yes, please. Are you able to see me? Am I unfrozen? I think I just stressed out my computer a lot. Okay, is that better? Okay, good. Okay. All right, awesome. All right, so we're going to just watch this a little bit more, see if we can get, today we know was obviously a very, very strong trend day to the downside. We took about 6 or 7 trades to the short side. I didn't even, trade my long count at all. We could have taken probably 10 of them, but it was unexpected. I really did not think that we're going to have such a strong trend move. So I traded a little bit cautiously. I didn't capitalize on every single possible trade that I could have, right? One thing that we did today that was kind of fun is we traded the higher low on a retrace basis, or on a fade basis, which this is also setting up a little bit here. Just watching this candle. Again, I'm going to do it on very, very micro size just because I'm bored and I'm not taking, since I don't have any continuity trades. So we can take this MES. If this thing stays at these levels, 10, 12 seconds, it gets down to like 3 seconds, I'll be a buyer here. All right, I'm in the trade here. The target is 2025. Let's see if we can make that target. Right over here, you can watch it. And there we go. So this was like, look, we managed to actually make three 3 winning trades out of this. It's an interesting counter trend setup. Like it's not anything I am advocating you guys do all the time, but it's fun. It's actually makes a lot of sense. It's a pretty good risk trade at this particular juncture. We had massive sells. You have a higher low. You basically reverse the logic, right? You reverse the logic. You take the opposite. I'm actually curious. Anybody take the counter trend trades with me? Anybody take these little counter trend trades, or are you just watching me, experiment myself? But I think it's a perfectly legitimate structure, and that's the beauty of trading. You can discover, your indicator once you start looking at it from a different perspective. You can discover a whole bunch of interesting different ways of reading the same book. Tommy Tan did. Tommy, aren't you like? Oh no, I thought you were new. Okay, so Tom, you've been around. Okay, so now we finally getting a little bit of green sunshine. This is not a signal. We need a second signal that's going to be a higher low momentum wise for us to trade it. But it was an interesting idea. It's at least giving us some possibility of a turn trade. The cool thing is, the really cool thing, I hope you guys see it, is how great this setup is at telling you exactly what is happening, right? Once you begin to understand the symbols, once you begin to understand dynamics, once you begin to understand what's happening, it's pretty easy to read the price action, right? It's pretty easy to kind of understand, who's getting tired, who's still got power, which direction are things going, and that gives you a much better reading of the lay of the land, right? You guys like this? All right, no signals here. Oh wait, I still have my turn signals, but again, lower green on the signals, lower green on the Dow. The Dow, though, because it was the most sold off, maybe the first one to show some semblance of a turn, right? So let's see if there's a semblance of a turn. Mikey likes it. All right, Mikey likes it. Good job. Semblance of a turn. I'm watching the Dow. Dow may be the first one to show us a possible green signals. Oh man, you know what's going to have to happen? I just realized I told Kay that in order for us to really trade well, I'm going to run these things probably 2.5 hours. Like, starting next week, we're gonna trade like 9:30 to 12. Because one of the things that happens, I realize, is the markets, like today, the markets really cooperate in the first hour. We could have been done in the first hour, but a lot of times, they don't cooperate. We can't pick and choose. Within the 9:30 to 12 o'clock, there'll be a great trend segment where we can totally capitalize on our trades, but we don't know exactly when it comes. So we really have to run it like, longer time stuff, right? But the espresso machine is in the kitchen. And now I realize if I'm going to run these marathon trade sessions, I'm gonna have to get the espresso machine to be here. We have to buy the espresso machine to be here. Because we can't sacrifice that. That is sacrosanct. All right, still looking for see what the turns are. Where's the Nasdaq? Nasdaq is still wiping out. It's still kind of negative. And where's the Dow? Where's the S&P? S&P still kind of negative. Higher low on the S&P though. Dow turning positive. Dow is the first one to recapture the 8-period SMA and start to turn a little bit positive, right? After being sold off the most, 600 points to the downside. So maybe there's just a little bit of a turn trade here. Coffee minimizes mistakes. Is that what you're saying, 007? The coffee minimizes the mistake. Yes, you create the proper environment is to have everything at your fingertips. Coffee being a critical component to successful trading. Watching NAS. NAS is also starting to bottom out a little bit. See, isn't it really cool how when you start to really understand the price action in depth, that the very same signal that signals continuity to you can also signal reversal. Like, this is the thing about markets that's very hard to explain to new people, because in real life, when it rains, it's always raining, right? It's always wet. But in the markets, sometimes rain can be wet and sometimes rain can be sunshine, right? That's the thing. Like, everything is totally binary depending on context. And the signals can show you context really well, dynamically, by showing you sort of interesting hints in the price action, right? So depending on how you read the context, you can actually take the exact opposite signal from the very same indicator that you have here. And that's, it's just only something you understand about markets after you've traded a long time, that you can't really explain to people in the real world. That's why most people who try to trade, it befuddles them. Gordon says, do not set up espresso as an IV. Gordon, the espresso is the IV. I'm jonesing because it's been an hour since I haven't had my fifth espresso. So I'm, you don't want to see me jonesing. All right, we're starting to turn a little bit. Let's see. This is the YM turning? No. Okay. All right. So be patient. I'm just, I got nothing, so I'm doing nothing. NASDAQ starting to turn a little bit. S&P starting to turn a little bit, but nothing much going on here. Really puked it out a lot, huh? All right. Let's see what everybody's saying on Twitter here. See if anything is happening here. I love Doug Pumpet. Now that the debate is over, I can focus on losing money in the stock market. That's true. That's true. It's funny. All right. Well, it's all debate news. Nobody has anything interesting to say about markets. Oh, we're back down to lows, back to fresh lows. This is actually session lows. I sold the lows just because I capitulated to the low. I sort of took a look at this and I thought, okay, we're making fresh lows after we kind of tried to do a relief over the 8-period SMA. There should be some continuity over here. What's my TP on this? 1350. So we'll see. It may retrace against me. The move I didn't quite realize that this move. I wasn't looking at this candle very seriously. I should have thought about this. It's a 19 to 13 candle, 6-point candle, too big a candle for me to have shorted. So watch my mistake, and watch me probably eat it because it was a big mistake. It was too large a candle to have shorted, especially on the lows. But let's give it a shot. Let's see what happens. Yeah, it's gonna. I eat it. It's fine. It's definitely starting to turn here. Definitely starting to turn here. Definitely. Okay. Now watch this. We're gonna have fun. Ah, nope. I'm eating it. I'm eating it. All right. I've ate this. Uh, this one I ate both ways. Because I was trying to trade the turn table, but this wasn't, this wasn't a good signal to have turned. Um, and now I'm just going to let it go. I'm not going to eat it again. Bad sequence for me because I was just trying to, trying to do a reversal move on a stop, and it just kind of died me out. This was a bad trade because the candle itself was too large, right? Too large. Now I'm going to try to be patient and not tilt myself and see if I can find a better setup. I'm just, it's been so long that we haven't had a trade that I just started to kind of force bad trades here. And you see that happens. Again, fortunately, I have small sizes, so nothing I do really hurts me badly. But this was an unnecessary error in my trading. Okay, 8-9 seconds left. There we go. Okay, that was a better trade. So why was this a better trade? It's actually, you know what? It's actually good that I want to show you the good trades versus the bad trades. Why was this a good trade versus this was a bad trade? This was a good trade because this was a lower low, but a muted candle. There was more continuity here. This thing, whenever you have a large candle, and I know it's tempting to trade the large candle, the retrace risk, you can be right on the direction and wrong on the trade all the freaking time on a large candle. And I took this the wrong way, and I tried to reverse myself, ate that. I'll work it back by tomorrow. I guarantee you, I'll be fully back on these trades. But it was a bad sequence because I did not follow my own rules. It's just a really good lesson. I think it's actually almost better that you guys see me fuck up a few times than to make every trade a winning trade, because it's much more intelligent to understand where the screw ups come from so that you don't tilt. This was a purely bad execution, so there's no reason to go tilt. No reason to fight the market. The mistake was solely mine. I had to correct it, right? Okay, let's the YM. Do we have a turn trade in the YM? I'm just waiting for what I want to find a good green trade. It's been 3 hours without a good green trade. I'm just trying to find a good green trade. The market may not give it to me, and that's the thing. So remember, what am I doing here? In my mind, I'm looking for green trades. The market doesn't have to give me shit. The market can say it's going to be all red trades, and you're just being an idiot, Boris, because you're filtering out the opportunities I'm giving you. Very just a good lesson in understanding how our own psychology will sabotage us from time to time. Which is, again, I'll say this ad infinitum, you will fuck up. The only thing that you can do to protect yourself is trade small. And, if you notice, I traded small, so I'm not really hurt. Both, the accounts are totally preserved. And I actually, I've actually only traded my short account. My long account hasn't even been touched. And that's another great thing. So, two things that you do, irrespective of whatever your strategy is. You separate the long and the short. This way, if you're stupid on one, you're still smart on the other. And you trade small. That way, if you're stupid continuously, you're still not dead. Everything else can be fixed. These two things, if you do them, you can stay alive. And then you can correct, course correct midterm. So really, those are the two big things that I do that you guys see. And you can see this live in terms of how they go, right? Why fight the market? You're right. Why fight the market? Because mentally, I'm like, the market is already oversold. The market is down 1.5%. Generally, when the market is down 1.5% by 10 o'clock in the afternoon or 10:30 in the morning, it's going to rally. It is rallying. It's bottomed out. It's fucking bottomed out, right? but I am too eager to look for the greens and not really taking full advantage of all the reds that are being presented. So you're right. Is that, oh, I called you God. You're actually GDD. I thought it was God talking to me, but just GDD. But anyways, you're absolutely right, GD. That's what I'm trying to tell you. So mistakes are inevitable. Lots of psychological loops in your head are inevitable. The key thing is if you create opportunities that do not, oh, here we go, that do not endanger you, you can survive. Okay, so what I say here we go. What I say here we go. The Dow turned, right? What we're looking for is, remember I said a high, we need to, higher green. This for a second popped up as a momentum trade here. That would have been a higher green than this one, the prior, right? As I said, we always compare to the last green. It doesn't matter if it was like 10 reds ago. So now, still no trade, still nothing in the Dow, still no signal. That's keeping me on the sidelines, but at least it got my interest. I'm trading Apex prop account, which is being traded through Trade-of-8 right now. This is a prop account. It's a virtual account. Okay. All right. No signals here. Let's go look at the the Nasdaq. Nothing here. S&P. Nothing here. So the Dow is the other cool thing is when you're watching the three excuse me, three instruments, you can see which one is leading, right? The one that was the most sold off is the one that's finally starting to show a little bit of a turn. And once we get that, that turn signal, we can take the lead on that instrument. A lot of times that happens. The one that's the most beat up is going to be the first one to get up off the ground. Sometimes, not always, but sometimes. First retrace signal in the Dow. Couple of green ones that are lower lows. Nothing going on over here. And Nasdaq, I'm really surprised. The Nasdaq is just showing fresh sells here. Turning on Nasdaq, turning on the Dow. All right, let's watch the Dow. We're just going to focus on the Dow, see if the Dow can give us a signal. The other thing I hope you guys really like, and this is the key thing, I'm gonna put the link again here. You know how, I see a lot of people do the, hey, I'm making a trade here using ICT or Fibonacci or some other bullshit. And it's never, ever, ever the same analysis twice on the chart, right? There's always something different the guy's seeing on the chart that is completely non-replicable. And what's so cool about having the indicator is it's 1,000 times replicable. There is no interpretation. There's a modicum of interpretation in terms of candle. There's a couple of rules, but they're all replicable rules. Everything is rules-based. So if you have a rules-based approach, it is just so much easier to trade it continuously, because then you're not interpreting every fucking minute some bullshit subjective view of price action, right? This is not a signal, by the way. Unfortunately, much as I love for it to be a signal, it's not a signal. It's a lower triangle, right? It's a lower triangle, not really a trade for me. So you have to be a little bit patient. We can go to the. I want to go to the long count now. Actually, let's go to the long count. See, the long count has just been completely untouched today, right? All right, everything is starting to turn a little bit. You know what we're gonna do? Okay, let's have fun. We're gonna take a small one. MYM by just to prove to me that I'm wrong again. But at least, is this a 2010? Hopefully it's a 2040. Oh shit, it's gonna need to be 40. So I'm gonna get stopped out on this trade for the wrong reasons anyways. Okay. All right. I took a tiny little trade in the Dow because it wasn't a signal, but I kind of wanted to see if there was a possible turn trade in the Dow, right? And so in this particular case, here's the and it actually worked. So if you don't have the proper setup, now we actually might have a setup. Now we actually might have, like, this is a higher low. So now we can actually go to the YM, to the real YM. I got 32 seconds, and see if that, works our way. Oh shit! Hold on a second. Why is this not working? 1040. Okay, that's okay. That's fine. Okay, let's see if this YM holds. Because you see, this is it. Is it really a higher? It's not really a higher low. It's not really. I guess it is. I buy market. Okay, let's see. I'm not sure. I wasn't quite happy with this thing, but let's see if this works for us. So this is YM. 31 is the trade. Wasn't a perfect turn trade. See, I needed to be a little bit more patient on my turn trades, because you can see that on the chart, it's not really clearly definitively higher, a higher green, right? And I'm just kind of forcing the trade because I really wanted to show you how to trade. So I took the little green, the small micro trade on the first one because it was a lower green. And I just trying to trade the turn. This one is problematic at best. What's my TP on this, by the way? It's 31. All right, let's see if this has any chance of doing anything. But we're trying to get to 31 on the trade here. And again, not a great trade, but I'm taking it just to because I gotta go, and I wanted to just show you one. This one is actually, like, if this one stays, this one is a clear higher green. Like like it needs to stay, but of course it's a big if we hold the greens here. If it starts to rally here, this is probably the right signal to take. 35 seconds left. If this holds, it needs to hold at these levels. You can clearly, definitively see this triangle is higher than the prior one. That's a pretty good turn trade signal. That's where we want to be on the green side. If this holds, and it's got to hold, obviously. Eight seconds left, 7 seconds left, 4 seconds left, 1 second left. So you'd be in at 26 for a 36 target here on a kind of a legitimate turn, higher turn trade signal. And it goes through. It went through the whole thing. And I came in early. I got lucky, and I got lucky because I had a big stop behind me, so I was able to hold this. But my timing was a little bit off. But I just want to leave you with a quality, positive trade. Like just sort of a quality setup to sort of to show you exactly what I was waiting the whole time. Now, if you are like a one trade per day trader, or if you're like a trader, that's very, very patient, this easily could have been a $500 trade. You could have done this for 10 contracts on the Dow, just stocked. The trade would have been here. It would have been super easy. You could have made $1,000. It would have been a 20-point move, right? Just a huge move. You could tell once you had everything aligned, it worked like a charm, right? It worked like a charm. And that's the thing that I kind of just wanted to explain to you guys, that the setups are great as long as you're patient enough, which of course a lot of times I'm not. And look, it took us like basically 45 minutes to wait for that fucking turn trade to really work. But when it did, it worked like a charm, right? Now and finally there was a couple of good turn trades in the S&P. We could have done this for 10 in the S&P super easily, and that would have been a clean, clear trade to the upside. Same thing, right? So anybody take those trades, by the way? Anybody have fun with those trades? I hope you did. And there's more juice on the fruit here. Got another higher high retrace trade popping up for us. Happy to trade that when I have it. Got a win long. Good job. Ricardo got a win long. Everybody got a win long. Good. So, I guess live trading is all about watching me be impatient until I finally get my setup, right? I think the rule of thumb is let Boris trade micros, or you trade micros with Boris's stupid wild trades until we finally get the right setup, and then we can trade it properly. Anyways, I'm glad you guys had a good time. The long account is nice and forward. The short account got clipped a little bit today, and I'm gonna get it right back. I will definitely do it. I don't think we're gonna do live trading tomorrow because we're gonna take a little bit of a pause. We're gonna trade live in my room in BK. So if you want to join me in BK, everybody can just join me right over here and join Kathy. And we're going to reconvene against next week. Next week, I'm really going to try to go for longer trading sessions. And next week, we also, of course, have FOMC, which is really, really good. So we're going to trade the FOMC afternoon session for those of you guys that want to trade that. That'll be a lot of fun. So that's it. Everybody have a wonderful, wonderful day. I hope you guys really enjoyed it. It was a lot of fun. I like doing these longer sessions, even though sometimes it takes a little while for us to kind of get the right setups. Today was a very unusual day. Really, really, really strong trend that just would not turn until it finally did. But even when it finally did, the signals gave us the right opportunities to make those turns, and they continue to give me us right opportunities, right? So thank you guys. Everybody enjoy. I'll see everybody in the markets. Make sure you get everybody to come and join us on Trading Live. Tell your friends about it because I love doing this. And as you can see, I do it over and over and over again. Signal, signal, signal. Time to trade. I'll see you guys later. Bye-bye.